A very good morning to you. It is Monday, March the 10th, and it is, more importantly, Cheltenham week. Chris Beecham.
You excited?
Very, very excited.
I've never been. Not a horse racing person. So.
It's not even just horse racing, though. It's a festival.
Yeah.
It's a celebration of sport.
It was a festival of COVID 5 years ago.
Yes, that's exactly right. I love that. That's how it's got its reputation. With people like yourself.
Yes, exactly. It's just a reservoir of disease, but yeah.
Absolutely can't wait. On the train this afternoon, going to my favourite guest house. The most wonderful couple that run this guest house. Cooked breakfast every morning before the races. And yeah.
Will you be betting on the horses?
I may have a little flutter.
You don't strike me as a betting man.
During the week. Good morning to you all. So who do we have in the chat today? Well, Trade Live with IG welcomes Chucka. Good conversation here between him and I already this morning on the 200-day moving average. We're going to cover that when we take at what happened on Friday. Funky Gibbon, good morning. Chimpanzee Chap is back. Morning, fellas and ladies. That's right. Wasn't that a wonderful International Women's Day show on Friday?
It was excellent, yes.
Yeah, the ladies absolutely smashed it. Isabella, Gabriella.
It was wonderful because I didn't have to come on, so it was great. Yeah.
Well, were you? Because you normally sign in from home, don't you, on a Friday?
Yeah, so I got bumped for International Women's Day. It's fair enough. I don't mind.
Well, I know the feeling.
And what did you do all morning? Did you just sort of twiddle your thumbs instead?
Well, no. So I was in Bristol. I'd presented the night before.
Of course, you went down to the far west, didn't you?
Exactly. So big shout out to the Bristol students. We had a wonderful evening on the Thursday. We went through everything. We did a few live trades, showed them a bit of tasty, and then we went out for some Greek food afterwards.
Exciting.
So, yeah. Excellent. Great team down there. And hopefully one of them's going to come on the show in a few weeks.
Oh, wow.
So the president of Bristol, or the future president, she's going to do next year. She's going to come on the show and talk all about that. So, Maturin, good morning. Neanderthal neighbour. We've got a full range of them in this morning, don't we? Steve Davies, talking about the rugby. Now, breaking news, Chris Beecham watched the rugby at the weekend.
As I say, I didn't strictly watch it. Dad was watching it, and I went to see my parents, and they had it on, or he had it on.
The proper game, Scotland-Wales?
No, this was Italy-England. So.
The also-rans.
I don't know. Are we close to... Didn't we do really well in the game, though? So we're doing quite well in the...
When you say we, I don't know what that means.
I say the English, sorry. That's the only one.
So, Steve Davies, now, I am the fastest ever 400-metre hurdler from Scotland, but the Welsh rugby player did a fantastic impression of a hurdler against Scotland, and that was one of the rules that Steve Davies hadn't heard of before. You cannot hurdle over somebody's head as they're trying to tackle you.
No.
And that's what actually stopped Wales making an incredible comeback and it being closer than it should ever have been in that last 20 minutes of the Scotland game. We just edged it. We were really far out in front, and then Wales started a storming comeback.
You're beginning to lose me. I'm sorry. It's just...
We'll stick to
I'm getting flashbacks to school and rugby, and it never was a good thing.
Did you ever have to play?
We had to do rugby and lessons, yeah.
Any
injuries? Me standing very far away. No, I was very well.
That is one of the.
I was very clean for the rugby game, and just as clean afterwards. None of this rolling around in the mud for me. Thank you.
Good stuff. Right, shall we have a look at what's coming up on today's show, people? That's right. At 8:40, we've got trade expectations with Matt Arbour. That's after Chris and Angeline answer some of your confirm and send questions. That's right. We've got confirm and send back for one day only, for Chris's special knowledge to be imparted on you. 8:58, we've got all sessions opening bell with Aaron Bright. It's going to be an interesting open. Big moves on Friday that we're about to cover in a second. Live from the trade desk with Maxime Giron on at 9:40 a.m. That's right. The French against the Scots is the big showdown We have to try and stop France winning the championship. Producer Fred having a laugh in my... Unfortunately, Producer Fred had a bet on France to win by 14, that he was going to win his millions on Saturday.
How did that go?
And they won by 15. Unlucky. 10:05 a.m. We've got Technically Speaking with Axel Rudolph, including your trade of the week, and it's all about those charts at the moment. As the chat is on today, the 200-day moving average for the S&P 5723. Chucka, thank you for that. Let's have a look at what happened on Friday, Chris Beecham, in some overnight action. That's right. So over the weekend action, Chris, do you want to just go through what your thoughts were of these numbers as they came out on Friday? I was sitting in Nero, Cafe Nero in Bristol. Let's get those up on the screen, please, people, and we'll have a look.
It was slightly interesting, wasn't it? The weaker numbers than expected, really across the board. I'm just trying to find the figures. And then last month's figures were downgraded as well, but it was the unemployment rate rise that sort of...
Well, not
4.1.
Not the main unemployment. It was this, the U6 unemployment.
Yeah, that's the one you like to look at.
Scary rise.
Yeah, because it's the one of people who've stopped looking, isn't it? I think
Given up.
Given up. That's
it. They're still in the labour force.
Yeah. Not looking.
Yeah. It was just when it first came out. I must admit, the 151 was reassuring for me.
Yeah.
The average hourly earnings were acceptable. The participation rate was disappointing as well. So,
yes,
but 4.1%. I mean, 4.1% unemployment didn't rock me for a second. If that's why we went down, then I'm glad.
I think it wasn't enough good news across the whole report, and then of course wages still remaining fairly solid. But there was a lot of emphasis put on these payrolls report. It didn't seem to shake enough, really. It wasn't enough to change the mood music, certainly around US markets, particularly. And they continue to sort of struggle into the rest of the session, didn't they, really? Up a little bit, down a little bit, but not real...
Oh, it was a lot more than up a bit, down a bit. This was a horrific roller coaster of emotions. As you saw the number come out, the initial spike higher was quickly sold off. Then we found a little bit of support around the 2 p.m. level at Chucka's 200-day moving average. We tried to rally into the open, and then at 3 p.m. just absolutely cuffed. And quite an important bottoming, though, and that was the European close, as all the Europeans hedged, scared to go home long over the weekend.
Yeah.
But there were 4 headlines here that really made me think that was perhaps a trough in sentiment.
Really?
Do you want to know what they were?
Go on, then.
Number 1, Nvidia has had $1 trillion wiped off its market cap from the highs.
Trillions wiped off is always a good headline, yeah.
That kind of, it always... the alarming nature of it, right? But we have seen $1 trillion wiped off. Tesla completely has had its election rally wiped off.
Yeah.
A third one, NASDAQ has fallen 10% from the highs. So let's take a look at the daily. Right, this isn't the NASDAQ, but the S&P also falling. I think it's about 6.5% now. And then the final one was Trump just opening his mouth.
Oh, we're not watching the market. Is that what he said?
No, I think this was particularly at this level on Friday. The comment was, I might put more tariffs on Canada today. And then CNBC literally had to change it, or Monday, and then they sent another one, or maybe Tuesday. And I was like, this is just getting ridiculous now.
Yeah.
So I went in pretty big at that point, and then had a very nervous train journey back. I was checking my phone every few minutes. But thankfully, it really did have a proper rally from 5:15 onwards.
Yeah, it has, isn't it? It's stabilised for the time being.
But that was until Trump gave his Fox News conference yesterday. We were actually looking small higher in the weekend markets that IG do until the Fox News interview, in which he said he doesn't care about the market.
Which is a weird thing to say from someone. Well, everyone thinks he's the stock market's president, so he's very keen to see it go up.
Yeah.
And now it turns out he's not watching it.
And that was, well, he actually said it can take a bit of pain. You know, these things happen because we're doing something big.
Yeah.
We're bringing wealth back to America.
It's incredible how tired I am of the hyperbole already. There's 4 more years of this nonsense. There really is. It never stops. It never stops, does he? It's just constant. All the way up to 11 all the time. It's so tedious.
The chief economist of Berenberg actually is getting quite angry about it, and came out this morning and just, you know, sort of said, look, this is just chaos. He's spreading chaos, and you know, it's the important thing, and what will happen soon is the market becomes desensitized to it. And this was Friday's, you know, for me, I was happy to buy at 5675 because thankfully you had somebody come out at 5:30 and speak sense, and you had Jerome Powell, right? Jerome Powell came out, he said, look, the economy is still strong. Yes, there are certain uncertainties, but this rally from literally Jerome Powell stepped on stage here, and you can see we went from 5685 up to, well, what's that, 1.7% rally?
Yeah.
And Trump needs to learn just to shut his mouth.
You'd be lucky though, that's the problem. But this is the thing with US markets, they have these big downward moves, there's plenty of buying, but they just can't hold the highs. That's the key at the moment, isn't it? That you're just seeing these outflows of people coming back because of the policy uncertainty. And it's the old cliche. I was talking to Reuters on Friday about it. Markets hate uncertainty. It's the cliche that gets wheeled out time and again as if anybody's got a crystal ball. But this is uncertainty on steroids.
Yes.
This is one day tariffs on, tariffs off. As someone said, tariffs on, tariffs off all the way through the week, and then golf at the weekend. And that's his. Because he did fly for the weekend to play golf.
But he is off to Saudi, isn't he, this week?
Apparently.
So this is the big meeting in Saudi Arabia that you're going to have Zelensky there. He is going to be meeting with MBS of Saudi Arabia, and they're going to be trying to basically taking the control of the conversation away from the US and allowing a more open discussion and Zelensky to be heard.
Right. Which is interesting. Because the Ukrainians clearly do need to sort out at some point, because you've got the satellite stuff's been cut off. The intelligence. The F-16s, they don't work as well because of the computers inside them.
Oh, wow.
Yeah. I was reading this about the F-35, which is the one everyone's buying, the new US fighter. They call it the I fighter because it constantly is upgrading. But all the upgrading of the software is done somewhere in Texas, I think.
Right.
And if they don't upgrade your F-35, it don't work no more.
It goes into standby mode.
It becomes a very expensive piece of kit that doesn't go anywhere. And so this is the problem, really, that people are saying you bought American and now you're living in a regime that says you can't use the stuff we sold you because you're not doing what you're told.
Yeah.
This is the real problem.
So that's Ukraine. That's going to be important this week. Rubio's there, the head of national security is there. So that's I think we're going to be headlines. What else have we got this week?
This week, CPI in the US.
CPI Wednesday. So as that first race, and this always happens, as that first race goes off at Cheltenham, then it's, do you watch the first race on the Wednesday or do you watch the CPI? Every single year.
This is expected to weaken, isn't it? It's come down a touch, isn't it, the forecasts, for core and for headline. Yeah. So that'll be a very interesting one to keep an eye on to see when it does actually begin to ease off. 0.3, 0.3 and 2.9, isn't it, I think? Or is to 0.3 month on month?
Let's have a look at that. So this week in numbers, let's go straight to Wednesday and so see those CPI expectations. 0.3 with 3.2 and back into the twos on the headline. Seems a little bit optimistic with all the...
I knew you'd say that. I knew you'd say that. But this
I'm short-term bullish.
if you look at the inflation numbers of the last 2 years, January always sees a spike and then it always comes off again. So if history is any guide...
Yeah, but history's got absolutely nothing to do with it when you've had the tariff spend.
Well, perhaps this is the key thing to watch. We'll see. But certainly the last 2 Januaries we had this, inflation's come back again, and then it eases off the rest of the year.
Yeah. Well, it is just that danger that you get a lot of pre-buying that has put prices
And
up.
have you seen this stuff about the GDP now tracker?
4% now.
Yes, because you strip out the gold imports, it makes all the big negative downward move in that was mainly down to the gold imports.
So they've actually managed to strip it out.
But a big update on Friday, a big blog update, and said this is how it's calculated, this is how it goes in, and there's a reason why it did that nosedive, and everyone got very worried over it, including yourself. It said if you strip out the gold importing, it actually...
I did say there was technical factors.
Yeah. But this is... I was banging the drum for GDP now is forecasting doom.
Yeah.
And actually it's not quite as bad.
Yeah.
It's an interesting development, really. Whether that helps to stabilise markets as well, be one worth watching.
Good. Right, Andrew McKelvey hearing that Warren Buffett has sold his S&P 500 ETF. Okay, let's take it back to what actually matters, right? What actually matters for this S&P 500, where it's going to settle, is, of course, the earnings forecasts. So if we have a look at the 24 level, obviously done and dusted, right? $246 of earnings. Then look at the 25 forecast. So those have slowly been coming down. Chris Beecham, I put it to you. What is the right number for 2025? Currently in the market's at 270.
And that's the EPS forecast.
EPS forecast, $270. Up from 246. So that's 10%, isn't it?
Yeah. You think that's good enough? You think that's too rich? You think that's too much?
Well, the market's starting to price in that number could be wrong. Definitely. Because, well, what are we down to? We're down to 5,700, let's call it. What's the right number? What do you think we can have in a world of Trump? You know, you're complaining that you're bored already of his chaos.
I'm bored of the hyperbole, not necessarily the chaos. I'm bored of the way he just... There's no getting through to him. You can't.
Yeah.
You could tell him 1 + 1 = 2, and he'd tell you you're wrong. That's what really irritates.
Yeah, we're going to have to look at that.
Yeah. We'll look that up. He does that hand waving thing, like when Macron told him he was wrong. He goes, "No, that's just saying." Well, that's what you say, but it's what I think.
But what does it do to numbers?
Yeah, I think it. Well, the proof of the pudding will be in the eating. Of course, we are now at essentially the end of earnings season, aren't we?
Yeah, and that's
wait for another.
That's been on track. So you've got a Q1 set of numbers that is well on the way to that 270.
Yeah.
Can you hold it? Or does the run rate in H2 start to fall off? If we come in with a number of something like 255, okay, so it's still 4% earnings growth for the year, you know, in some kind of second half recession, and you stick that 255 number on a 21.5 times multiple, it's 5,480. So it's another 3%,
points, yeah.
4%.
Yeah.
So the downside here, I'm actually, now that we've had the move down, for example, I can happily sell puts at 5,400. Oh,
Steady.
yeah. Selling puts at 5,400, I sleep well. Quite happy with that.
You see, it's already taken. It's
Especially
quite a
with
hit.
where it is.
Yeah, if it's taken quite a hit, isn't it, at the moment? And so it's looking. What is the current P/E ratio then on that? At 57.35. Where are we now?
With the 270, we are 5,730 divided by 270, 21.22.
Yeah,
We're already down to 21.2 times earnings.
It's very cheap. And then as of Friday, it was 27 times earnings. So, which is cheaper than it was, isn't it? So
What's that, sorry?
27 times earnings was Friday. So
20 on the NASDAQ?
on the S&P.
No, 21. No, as in what, backward looking?
Yeah.
Who looks backwards?
Me.
No, 200.
That's what I'm getting from Guru Focus. So I'm just checking that one.
Oh, well, are you using AI to work out?
Nope, it's a website.
5,000.
Or if you take multiple.com or multiple.com, it's currently 28.84. So
No, that's not right.
that's what they're based
23.
on.
23.2 on
Okay.
2020. They're using 2023 earnings.
Yeah. Well, there's current earnings.
No, that's 2024.
Hmm.
The 2024 earnings were on 23 times earnings.
Yeah.
Yeah. These websites, don't trust a website to tell you. Get your calculator right.
Anyway, is it pricing in enough bad news at the moment for it to rally? That's the key thing. Do we think it's now come down sufficiently?
This is what I thought on Friday. If $1 trillion has been wiped off Nvidia, for me, that's enough froth.
How much froth is enough? Exactly.
Yeah.
Yeah.
Let's say it starts to look interesting. What I am happy to do here is sell puts another 10% lower, because then you give yourself a cushion. Vol's elevated, and there's a fancy new update being put on the Tasty platform,
go on.
which makes me even more excited to do it. So in the top left-hand corner now, you've got this button, and that can get rid of your watch list. Now they've got the menu down here, so the menu's like more central, and then you've also got your account up here. So very, very slick, very slick. But yeah, S&P for April. Let's look at what you would get. 5,450. Where's my April monthly? 540. Yeah, you get $6 for that.
Okay.
Which is nice.
It is nice. Interesting. But yeah, I think then this is my point about uncertainty. If you've got US markets that were richly valued, and they're not as richly valued now as they were, but they're still arguably quite richly valued. But then you've got, this is what I mean about uncertainty. It's not just the not knowing, it's the sheer, what's the word? The back and forth. The tariffs on Canada one day and then not the next day. This is going to go on for months. And if you're an investor, you may not choose to exit the US entirely, but you're probably going to say, what's the point of okay, it's the world's largest market, so there's not much else you can do. But you're going to look for other opportunities.
Yeah. Oh, thanks, guys.
You're going to say, oh, I'd rather be in Germany or China, because you don't have the policy.
Or the FTSE.
Yeah, or the FTSE, amazingly, because you don't have the policy uncertainty of a man who's just making it up on the fly. And that's the impression that everyone's
I'm feeling
getting.
a lot of negativity from you this morning.
I know, exactly. I've come with, but this is
a trader's dream.
It is.
We
It
need
is.
volatility.
The volatility is there, exactly. But if you're looking at it just obviously on the broad fund flow angle,
Yeah.
because it was all, maybe the signs were there of people piling in to buy the US, and then suddenly he believes his own rhetoric, which is a dangerous thing. You can't really invest in a country when you've got an administration so devoted to saying one thing on Monday and another thing on Tuesday.
I think the important part for me is that we have 3 puts, and those puts are at different levels, right? But we've definitely got Jerome Powell put on the growth front. So if we do start to see that move in unemployment, rates come down.
Yeah.
We've got the White House put at some point. It might be 5,200, it might be 5,000. Him saying that he's not watching the stock market, absolute horse crap, right? He knows that that's where his electorate have got their money. And, you know, for all the positivity he's got around Bitcoin, I mean, believe me, he's going to be watching the $80 trillion S&P. So I think you've got the White House put. What he might be doing, which is very clever, and I give him more credit, and the credit probably goes to Scott Bessent, is that bring short-term rates down, bring funding rates down. When you've got $7 trillion to refinance,
You need to bring those short-term rates.
you've got to bring them down. So create chaos, get 4 rate cuts into market expectations, and then do a load of refinancing. That makes sense. And Besant's actually admitted that's what he's doing.
Yeah, he has very much said we are looking to cut back on the parts of the economy that are in order to get those rates to come down. So they are engineering this one way or the other.
Good. Right, and the guys in the gallery today, Caleb and Phil, are engineering a break. So we shall be back in 2 minutes. We'll see you then.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back to Trade Live with IG, Chris Beauchamp and Mr. Scottish man in the chair, Chimpanzee Chap. Thank you. Thoughts on Orange Man are harsh, but markets do not like chaos, especially the chief market strategists.
Yeah.
Pelican, welcome back, my very good friend. Loving the US markets top in depth. That's where we sit. Are we at what multiple should the market be on, and what's the right earnings number? For me, it's 255 to 260 and on a 21.5 times multiple. So we're there and thereabouts. We're about between 5,500 and 5,600. What about European and UK stocks upgrades and downgrades? Chris Beecham, shall we take a look?
Yeah, have a go.
What sticks out to you there?
Well, it's not the most exciting morning for the upgrades, is it? For Pennon water companies, whoop-de-doo, that's very. Yeah. More interesting, of course, downgrades for BAE.
That's right. BAE has met
after
the
its
price
stellar
target.
run, I suppose. Really, that's the key, isn't it?
Which makes sense. I mean,
Where are we now, BAE?
it's upgrading their price target or cutting to hold. They've chosen to cut to hold. BT, British Telecom, cut to underweight at Barclays with a 150 target. 150 underweight. Still got upside. How does that work?
Maybe it's just caution. You've got to be careful with these brokers.
They clearly see more upside in Vodafone after its wonderful day on Friday.
Oh dear, yeah. See, look at that BAE move. We were at 1200p in January, and we're now 1573. That's why you've cut to hold, I suppose.
Now, this is the time of morning that I start to look around the studio and realise I haven't seen the bell this morning yet.
I was delighted not to see it, but yeah.
Where is it?
No.
Ah, well, we'll just have to improvise. For Cheltenham Week, we shall be...
Oh, it's there.
Ah, there we go.
I can hear Terence shouting.
Thank goodness for
Terence.
that. Phew.
Sorry.
What would stocks do if they couldn't open? Right, Monday morning, 10th of March, we are ready to go. God, that's ringing right through my ear as well. And they're off and running with this Cheltenham theme day to get everybody in the mood for the best week of the year when it comes to sport. Yes, it's the Olympics of horse racing. What are we seeing straight from the off, Chris Beecham?
The Olympics of horse racing, where did that come from?
It is.
Kingfisher up 1%. Interesting. House builders as well doing well. So this can't be down to Mark Carney being elected Prime Minister of Canada, can it?
Yes, we still have to go over Mark Carney and the news. Right, JD Sports. One of you picked up JD Sports. Hands up, please. So yeah, JD Sports there, up 1.3%. That's been a nice bounce. Kingfisher up 1, Rolls Royce up 1. And IAG up 1.5%. Reassuring for IAG, isn't it? That's been
doing
quite
well of late, isn't it? I think. Isn't it?
Yeah, really good response. Ryanair up 6, so I'm guessing that Ryanair has had an update. Haven't seen that one yet. We'll get the details for you on that. Rheinmetall up yet another 3%, 1144. It always struggles when it gets into the 1160s, but I'm saying that wrong. I would get ticking off for that. 1,150, not 1150. So much easier to say. Right, Fred's favourite stock, ThyssenKrupp, no trade yet. It does look like the steel tariffs are going to be going ahead this week. The Trade Secretary of the US confirmed that over the weekend. We've got Entain up 1.5. Persimmon up 1, and Legal & General up 1. Legal & General now 249, right? Remember, we were struggling around that 242 level. They do have numbers this Wednesday. So results for Legal & General this week, 249 pence traded there. Rio Tinto, there was talks about a 5 billion share sale. I saw a headline this morning saying that they think that's off the cards. So Rio's up 1%, and Whitbread, even with the downgrade, is up 1.2% as well, with Lloyd's 71.4.
It's not a bad move. So quite a very solid start to the week there for a lot of names.
Yeah. Well, Friday afternoon was a little bit of a, we closed on the lows, pretty much on the lows of the US, apart from Vodafone, which went into rocket mode on the upgrade. So if you're wondering why Vodafone is one of the best performers in the FTSE this year, it's because that German package, of course, great news. The real problem child in the Vodafone portfolio is Germany. They've really been struggling to turn that business round. When they do turn it round, then things are looking much more
positive, generally. Yeah.
Positive.
They're saying this morning Germany could spend up 2 trillion euros without really knocking itself.
Yeah, I think
which must be galling for Greece, because they had 10 years of being told, well, you're not allowed to spend any money because it's bad for the economy. And then suddenly it's, oh, we can all spend money. It's
yeah. Different times.
Different times, yes. War does that to people.
I think we've got that story in the, well, there's the front page of the business section. I thought that Germany story was there. Maybe it's in the Financial Times.
The FT, it was that one with Merz at the bottom.
There we go. So, in an Economist poll, Germany can spend 2 trillion without harming growth. That really will change the fiscal path of Germany. That's not just taking the brake off, is it?
No.
Could take on just under 2 trillion in debt over the next decade without running the risk of damaging growth. So that is one of the reasons why Vodafone has been so strong recently, and in my opinion, could potentially be one of the strongest share price performances in the FTSE 100 this year. So yeah, we saw a big 3% move. Shall we have a look at the graph just in case?
Well, we haven't looked at Vodafone for about 5 minutes, so we probably should look at the
Well, we haven't checked how many shares they bought back. I assume it was 5 million. Yeah, 5.5 million. And the chart, once they fix the charts in this system, it will really start to be much better. But there we go. 2025 year to date, that's approaching the next level of some kind of breakout at 72.90 or 73 pence. And then you've also got a dividend coming up in May as well. So there's Vodafone upgraded on Friday to an 80 pence target post-dividend. Right, Ryanair coming back a little bit. It was up 6, now only up 4. Shall we have a look and see what they came out with this morning?
Oh, what they said?
Oh, there wasn't.
I didn't see anything.
Why is Ryanair so strong this morning then? Have any of you seen anything in Ryanair? Do let us know. And yeah, so John Wood now 39 pence. And IAG 10. WH Smith up 1.2%. So they are down to the last 2 bidders for the high street business. WH Smith, 2 bidders. The chatter goes that they've got 2 bidders left to buy the high street business. Yeah. That one had a really tough week last week, but we've seen a little bit of strength there this morning. And we can, because of the time changes in the US, Chris, I know you're going to be very excited about this. We actually get to do the all sessions right now.
Oh, good.
For the next 2 weeks.
Rejoice. Yes, because they changed their clocks in there.
So shall we have a look at all sessions as well? Let's see what the let's see what's going on. So Tesla down 2.4%. That's one of the weak ones, as Nvidia is. So continued weakness there. Nvidia back down to the level. It bounced off 108, I think it was, on Friday, but giving up some of that bounce this morning with Tesla. 256. Oof. Just widen that out a little bit, let you see the others. MicroStrategy down 6, of course. Bitcoin having a terrible weekend. Talk about travel and arrive.
Yes, it's awful. And all the more news of, didn't Texas say they'd start building a Bitcoin reserve as well, I think, was the news I saw this morning. Yes, but indeed, the news has not been positive for crypto, and Bitcoin continues to suffer.
Palantir down 2. Back down to 83.30. That's been really volatile around that $80 mark. Looks to me like there's a lot of open interest there. Robinhood down 5. Coinbase down 5. So not loving the move down to 82,000 Bitcoin there. Do we have any stocks higher? Airbnb.
No. The Americans will be going on holiday, surely.
And Moderna small higher as well, up 50 basis points. So we Monkey Man telling us Tesla bottles filled with gasoline. Not sure what you mean there, Monkey Man. Tell us more, please. Yeah, we'll check the Washington Post for that. Trading Days telling us that IAG strength is from an upgrade at RBC with a 440 price target. So 440 on IAG.
Oh, people throwing Molotov cocktails at Tesla lots. Woman in the black hoodie walked onto the Tesla car lot. No, I can't read it now because I'm not a subscriber. But yes, the people are attacking
Tesla
lots.
So this continued anti-Elon, anti-Doge.
Yes. And the Republican speaker said to Republican members of Congress not to conduct town halls at the moment because the sheer amount of vitriol they're getting. So I've seen some of the video that the people just booing them out of the room.
Yeah.
And worse. Because it's gone down like a couple cold sick, really.
Yeah. Oof. DoorDash up 6%. Tell us what is going on in DoorDash. That's one that I see Deliveroo as well pulled out of Hong Kong this morning. Doesn't look like things are going smoothly for them there.
No. Is that a pun?
No. I thought you might think of one.
No, I was trying to think. No, I'm not going to do it.
Yeah, no takeaways from that. Robinhood and Coinbase dropped because they're rumored to be added to the S&P, but didn't get it. It was DoorDash instead. See, what an incredible community this is. Boise nailing it this morning, telling us the reason for DoorDash. So that's an interesting one. So if that was that not expected at all then? Because that...
It's a bit of a surprise.
That's interesting. If this has come off recently, and it has, it's come from 212 down to 178, and now it's getting added to the S&P. Ooh, that's going to be a really interesting one. But unfortunately, it is not all sessions.
I have to change that now. Now it's in the company of the big boys.
Do we have a word?
Yes.
Let's get them on the phone and get that one, because that's really interesting. The index ARB guys are going to get hurt on that then if they thought Robinhood and Coinbase could be in. That's going to be brutal, and that's on top of Bitcoin.
I see. So DoorDash gets in because it was considered a consumer discretionary company and not tech. So they decided to leave the tech alone, but add in DoorDash. That's why. And also more stable than the other one, AppLovin, which was the other.
AppLovin was the other contender.
So that's why it got in, because it was more genteel and because it's the right sector. So it's interesting.
Right, the future's starting to come off here. Great shout by Chukka this morning. Chukka, hats off to you, sir. Tip of the hat, that was a great shout. You said that Europe could well indeed come off. The FTSE has, Germany has, and we're seeing further weakness in the S&P 500 now that we've seen the all sessions open and we've seen what the stocks are doing. So
I don't think you've seen the end of the selling yet, because people are too keen to buy the lows. And I'm conscious sitting in the room with someone who has bought the lows. And people have been looking at the talk of the 200-day moving average. It's come off enough to buy it again now. Mm-hmm. But there's a sense that things are beginning to change. And there isn't almost enough fear, really, for this to really form a durable low.
Remember that some stocks are down 35%.
Yeah, exactly. Weeks. Well, yes, that's the thing, isn't it? The index sort of masks the carnage that you're seeing.
Yeah.
But it just felt like over the weekend it would be, well, it's had a big sell-off. We're waiting for it to sell off, so now we can buy it again. The all clear has been sounded. And that just makes me give a little bit of a pause that you might see a bit more downside yet.
And we've got, Vol's now up 2%. So Vol was only up 1% when the futures opened last night. It's gone further, 21.6. I have trimmed a lot, as you can see in my portfolio, off to the races, literally. And there's nothing worse than standing there enjoying the afternoon's racing and suddenly getting hit with a big loss in the portfolio. So, so you see I've got a little bit of Tesla there, a little bit of Nvidia, and Havas and WH Smith. That's all I'm sitting with in those markets as well. But now, Chris, it is almost time for Angeline to come in and quiz you.
Oh, joy.
Do we know what the topics are, or is it random questions that are coming from the I think risk would be a good one this morning.
Yes, yeah.
We've had a few questions from the audience on risk, so I think Ange is going to come in and quiz you on those.
Okay, good. Good.
Right, everybody, what are you thinking this morning then? We've got Eurostoxx 50 that is weak, but shall we also have a look at currencies? Because currency is going to be a really interesting one this week with CPI and also with the peace talks in Saudi. So, a little bit of dollar strength this morning creeping in, actually. We've got cable 128.80.
Okay. Not sure about that really at the moment. And the dollar looks very oversold, doesn't it, at the moment? I think it's just an absolute whacking since the beginning of the year. Again, because it was always just buy US and then suddenly it's all come off. That maybe it is due a bit of a bounce. I mean, certainly you've held above last week's lows. Maybe some optimism comes back in after Friday's payroll.
Yeah, and then, well, CPI, you know, if we're, oh boy, so don't you worry, I've still got Deckers. It's been brutal, but I do have that in the Tasty account. That was horrific. Since you asked, a very quick look at the portfolio in Deckers. You can see what I've done now. I'm short the 150 puts, which means I now own 300 of those, or I will do in 11 days by the looks of it. And also I'm short the 135 puts, stock at 126. Deckers, do you own a pair of trainers, Chris?
No, haven't done for a very, very long time.
What do you do for your health?
I don't know, half the problem. But another matter. But no pairs of trainers and not any for me. So.
But, well, what's not healthy is this bloody chart. Look at that. It's absolutely brutal.
I thought there was a drill company that was Black & Decker, but no,
Yeah.
I'm with you now. Okay, Deckers. Oh, right.
It's, yeah, Hoka and Uggs. But that is truly an Ugg looking at that chart. I don't recall ever seeing a sustained sell-off. That is 3 weeks of pure selling.
That's one of your companies that you're talking about that's down 35%.
Oh, that's down more than 35%, isn't it? 220 to 120.
You've been trying to pick a bottom in that, haven't you?
Yeah, and it's not gone well. Yeah, 122. Boise, I am lost on this one. They do make stuff in China, right? So they make the Uggs, they make the Hokas in China. So there are going to be increased costs, but they've still got great margins. So
you're arguing the market is underappreciating their potential.
the problem was they came out in numbers and they said, right, EPS for the next quarter is going to be down 50% because it's we basically demand is too high for Uggs and we've run out of inventory. Right. So we're having to buy more inventory. But
look at that run. They went from May 22. That's obscene. Fivefold.
Yeah, but that's
for a shoe company.
Nobody had ever heard of Hoka before. So they hit the jackpot with Hoka.
I've never heard of Hoka. What? Hoka?
Yeah.
I have no idea.
Right. Good stuff.
Brogues? Do they sell brogues? No, probably not.
Hoka Brogues. Yeah. Maybe that's next year's.
The next product line.
Yeah, they'll have to move. If the share price keeps on going like that, they'll have to do something. Right. Okay. We have Angeline coming in to quiz Chris on risk. We shall be back in 2.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG. Trader friends, and welcome to Confirm and Send, and happy Monday to you. I am rejoined by Chris Beecham. Hey. So I guess, after last week, crazy volatility. Monday we saw that disorderly meltdown. Friday, at the end of it, a bit of rally. So lots of people here asking us a lot of questions around risk management and trading. So let's hit up the first one, shall we? How do I manage risk in trading? Do you want to start off, or shall I?
Well, there are a variety of methods you can use. The most obvious thing is your position sizing. This is the thing that people get wrong so often. They end up with position sizes that are too large because they think it will work in their favour. They often put their stop too close as well. This is the other key thing. They sort of have a fixed amount they want to trade with all the time. And they say, well, that means I have to put my stop here. No, you have to work out where your stop should go, and then you work out your position size from there. So you say you want to risk 2% of your account, your stop distance is 200 points away, so you divide the 2% by 200 to get the position sizing, not the other way around. Don't work out your position size and then work out where your stop should go. That's the most important thing.
Totally. And we've got a lot of different ways as well of, putting the stops in place. There's also a guaranteed stop. There's also the ability to have trading stops as well on the platform. So do use that automation, everyone. I'm also trying to zoom out here. Phil, am I zoomed out appropriately? It doesn't seem to be capturing my screen, for example. Yeah, let's see if I can zoom out. Okay, let's see. Right. So the reason why I'm trying to show you the side here is because we've got the Twitter feed as well. And last week when I was with a lot of the traders at IG, we had quite a few traders there saying because it's been so volatile, they also keep the tweet deck up and the alerts on the side up as well. Just taking a look at diversification as well. You can also spread your investments across different assets rather than just sticking to one. As Chris was saying, not just control your position sizing, but also know when to cut your losses as well. We talk about, legging out during less volatile times, but also when it's very volatile, you just need to come out. Right, so let's take a look at our next question, which is coming up now. Can I adjust my risk management strategy over time?
Well, I suppose you can certainly adjust it in more and less volatile markets. Certainly, so we're going through a period, obviously, at the moment of higher volatility, which means you may want to risk less per trade, because if you're expecting a bigger move, say today you're expecting a bigger move over the next 2 or 3 weeks, then it moves in your favour, you might hit your target more quickly. So you wouldn't need to risk the same amount per point, for example. Whereas you might also say, well, if it moves against me, I might have to trade more often because you're just getting a lot more whipsaw. Your view might remain in place, but the price action might just constantly be moving against you. And so you might just have to end up taking more losses than you normally would in quieter periods, really. So yes, you can adjust it over time. I think you should make it more dynamic to match the prevailing conditions of volatility.
Totally. And, Chris is exactly right. Never think that you can't change it because, there are lots and lots of traders last week on Wednesday when I met them, they're even clearing all trades, on the day, start fresh again the next day, whack it back on. Clear it by, if it's 4 p.m. and they have to go to an event, like all those traders that came to meet me at Fortnum, they cleared it before they came so they can actually enjoy and not be absolutely stressed out, because we all know that volatility last week was insane. Also, time of trade, that's another thing that I feel we don't talk a lot about. There's nothing stopping you from changing up what time you trade, so you choose a less volatile period. Yeah,
pick it up necessarily around the open or the close, for example.
Yeah.
And obviously bear in mind things like if you're trading Asian markets and you're in the UK, you will be not necessarily up all the time for the most volatile periods, so you can wake up and find something happen. So yes, you need to be aware of, particularly as well, which particular markets you want to trade, which ones will match the time frame you're actually living in, because that's just an extra consideration, really, I think.
Yeah. And also what you trade as well, of course, crypto ETFs, anything crypto related, likely to be more volatile. Tech, likely to be more volatile. Chip stocks, likely to be, more volatile as well. Do you have sort of set guidelines as to when you have to have more sort of red flags? I tend to call them red flags here, and sort of, be more aware of what you're trading, taking off your positions than others, or do you kind of watch the markets on a daily basis so closely that you...
I usually have to watch them on a daily basis anyway, so I suppose I get it. I get the as a byproduct of what I do, really. But if you're not obviously watching them, then that's why you need to make sure you have your stops in place, or alerts. Use the alerts on the platform as well, so that you get these updates. You don't have to be constantly logging in and checking and refreshing.
You can also use the platform to ensure that you have, use the deal ticket and order as well, so that you are only in a trade when you've given it a specific level to enter that trade. Let's have a look at the next question then. Oof, this one's a loaded one. What role do emotions play in risk management?
Well, ideally, they shouldn't play any role. Risk management should be a fairly neutral. What role do emotions play in trading is a much more interesting question, because that's where you often find people becoming sort of caught up in the fear and greed. And the fear and greed is what drives markets fundamentally, but it's also what drives investors personally. And you often have that fear of losing money, but also fear that, for example, your profits might disappear. So that's why people often cut their winners too early, because they've seen the trade move in their favour, and then they worry, well, if it moves back again, I'll lose that profit. So I'll take that now and forego the potential for more, really. So that it plays out in so many different ways, and it is very, very hard to keep them under control on a consistent basis. It requires that constant alertness, really. We are not robots. We cannot simply say do this, do that, and not worry about the potential for emotions to come into play. But we have to, if you've got too large a position size, clearly you'll begin to have that fear as well, because you'll be constantly worrying about the wide swings you're seeing in your portfolio. So there's a sense that if you are constantly logging in to check your positions, you're constantly worrying over what the position's doing, then you've probably either got too many positions on, or you've got too large a position size, either on a single position or indeed in aggregate, because you're just seeing these wide swings in your profit and loss.
Thanks, Phil. We're putting up lots and lots of questions from the chat. Thanks for alerting us, Phil. So Funky Gibbon saying, morning, should you balance risk against volatility? I certainly would change up your style, because it's going to be a much wilder ride. So everything from when I trade and also changing up your risk appetite, your position sizes. Do tell us how you change up your trading style when markets flip like that. James Bennett saying stop loss equals 1.5 times average 5-day range in volatile times.
Yep, because if you use sort of like average true range, that will then give you a dynamic sort of position sizing and positions and stop loss that will respond to the volatility that goes with it. So if you, something like average true range, clearly there are markets that go through periods of volatility and less volatility, and so you can adjust your stop loss distance based on that as well.
Are you like Tom work from home, where he does like the 14, he doesn't like changing it too much?
No, I think you can change it around a bit. I mean, you could argue, I know Axel goes with a 9, doesn't he, I think, on his RSI, so it's very much what suits you. There's no perfect system. So sometimes it will seem to be working better than others, really. But as a rough rule of thumb, I think that's the most important thing if you are sort of responding in terms of to the volatility, in terms of where you put your stop.
Another comment, James also saying profit target 2 times average 5-day range. What do you think?
Yeah, that's another way of looking at it as well. I think then that's the thing. It's a very personal thing, trading. You have to work these out, but the kind of things that will give you a sense of where you want your target to be, rather than just making it arbitrary. That's the thing that most people fail on, is that they just make it arbitrary and there's no process that goes with it. If there's a process, you are more likely to do well.
Do send us all your questions and share any handy tips that you might have, because this is all very useful for us given the space we're at the moment with the markets. I mean, just taking a look at Nvidia there and the amount of falls we've seen recently. I mean, this is a daily chart which we're putting out there. It is now heading beyond that 113 support level there. Let's have a look at just a recap of the markets for you as well. Monday morning, we got Tech 100 down almost 1% there. Germany 40 down, up about 0.2%. Wall Street, US 500 down there after quite a brutal week. Let's just show you what happened there. We are now seeing still a lot of volatility, but I spoke to the volatility desk on Friday, Jack and Matt and Elliot there, and they were saying that perhaps this week, it was too early to tell at that point, but they were hoping for signs of stabilization.
Yeah, and there's a possibility, and we were saying this with Rich, that people keep looking out for this, and what you are just seeing is these wide swings. If you look at these daily candles, even the big down days do have points where there's a longer wick, so it shows you how much further they did fall before the buyers came back in again. So it's just what you're seeing is the heightened volatility. I think a lot of people are looking for it to begin to stabilise after a tough start to the month. Usually the second half of February, first part of March is quite tough for markets anyway, where this is just seasonal. And US markets were looking sort of vulnerable to this kind of thing. But as I said to Rich, the more I hear people saying, I think it's going to bottom here, or I'm looking for it to bottom here, the more sceptical I become that that's actually going to happen.
Is that a scientific or just some, what you've felt or seen in the past with the markets when, there's a lot of mood music saying, I think it's going to bottom here?
Yeah, I think that when people start to be a bit too confident, whereas in August we didn't really have that. There was a fear that it might resume the downward move, and then suddenly it rallied and it became stable again. Whereas now people are assuming that because you've had this sell-off, maybe there should be at least short-term signs of stabilisation. I just worry that we've not seen the end of it yet.
And just zooming that in for you to show you what Chris was mentioning just now, here you are, the wicks there, they are, they were very, very long in the last few sessions and now, getting shorter, but that is not to say that we won't see this volatility going forward. We'll ask Matt Arbo's waiting in the wings next about volatility. Whack up the last question. We've got one more question to go. Here we are. What is the risk-reward ratio and why is it important?
It's the foundation of proper risk management, really, more than anything else. Your risk-reward ratio says you look to risk 1 point for every 2 you want to make, really. So ideally, more than that. you aiming to make sure that your winners are much bigger than your losers, so that you can take a series of losses. Say you lose, but if you lose 1 on 6 trades in a row, that's six points lost. But if you make on, say, the next 4, 3 or 4, you are then back in profit and indeed recoup your losses as well, because your winners are bigger than your losers. Whatever happens, make sure your losses are kept small. It's the thing that most importantly differentiates successful traders from unsuccessful ones. It's an inability to manage their losing trades.
Totally. And capital preservation, of course. For those of you, we've only got a few seconds left, but for those of you who want to refine their skill in this area, I'm just hitting up, and you've put it on my page, a very, very thorough site on risk reward, and it's got really handy. I'm going to post it on the chat as well so you can find it easily. Just Google that and you will see this page. At the bottom here, it tells you exactly how this works, and more importantly, how to calculate it depending on your risk appetites, because Chris's risk appetite is different to my risk appetite, and everyone has a different level, right? You might be more open to taking bigger risks. I might like taking smaller risks, but at smaller more often. And it tells you, if you whack up my screen really quickly, how to also calculate this. There you go. And speaking of risk, Matt Arber is coming up next. Thank you very much, Chris. Always a pleasure to have you on.
Thank you.
And we'll speak to you shortly.
Thank you.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, Why wait? Download IG Invest today.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Hey, welcome back to the show with myself on Trade Expectations with who is back from birthday celebrations.
Yeah,
How was it?
I'd
How
love to
was
say
it?
I had a mad weekend, but no, it was all very chilled. I went out,
What did you
went
do?
away.
Glow sticks? Did you have like everyone here?
there's-
If you don't know, he is a mean dancer, mean machine on the dance floor. Although he looks very shy here.
There was no dancing. There was no dancing.
Glue
It's all
sticks.
chilled, some nice food.
Champagne bottles popping left, right, and centre.
And no fizz everywhere. No, it was all very, very chilled. Befitting of my age, yeah.
Oh, 25 again.
25 again.
Speaking of age, we pride ourselves in having competitions here, and we had a load of people, trying to guess your age. And I'm pleased to say the winner is Monkey Man, who managed to guess it. And if it hasn't arrived already, the IG Trading Journal is making its way towards you. Hopefully, Royal Mail does its
IG Trading Journal. What pearls of wisdom are in that one?
Well, I couldn't find you last week because so many people telling me, Ange, don't let Matt see you because you have to be like a ninja. There are lots of surprises. I had to go to several desks to sign your card,
yes.
which was hiding on a chair, so it could have been sat on. And he had this Colin the Caterpillar cake as well. It was somewhere else. So yeah, I wanted to kind of do a bigger announcement. I also had the female takeover. I was leading the female takeover of Trade Live with IG. So it was all kind of like,
International Women's Day on IGTV.
Yeah. But the good news is, thanks to your birthday competition.
Yeah.
I had the ability for, what is it you called it? Advanced data.
Customer data mining.
So I now have Monkey Man's address. Don't worry. It's safe with me. It's safe with me. No one else knows. Everyone in the gallery is going, we need to find out who this man is. Don't worry, it's safe with me. He says, thank you. So speaking of secrets,
Okay.
everyone here wants to know.
secrets.
He is the man that knows everything.
Speaking of secrets.
Volatility.
Well, yes, an interesting
This
week
week.
last week. And is this week going to be any different? I shouldn't have thought so. Volatility breeds volatility often. It used to be a week of sustained moves, not just single days. This is markets are skittish, I think it's fair to say, and the sort of that unrelenting sort of the walls of money that kept on coming in, the persistent buying the dip sort of attitude that was there seems to have dried up a little over the past week. I suppose notably so even in the crypto markets where those sort of crazy crypto bros were, buying dips consistently, that a sell-off would happen and then a wall of money would come in. We're not seeing that at the moment. It's been,
Punching up
fair
Bitcoin
old
for you.
grind lower, across Bitcoin over the past week with less enthusiasm to come and pick coins up on the moves lower.
The interesting thing as well is that we had this brief just showing the Tech 100, because that's will give us a really good view there. This is the hourly chart, people, but we had a bit of a almost like leveling out, right at that point there, and it remains to be seen whether we're going to start tracking back up again. Are there any signals that you are watching out for as head of volatility products? Is there any grand hack that, or a rhyme that we can? If there is stabilization by midday, or by this time, then this is likely to continue throughout the beginning of the week.
Well, I think that the tone is being consistently set on the cash open. Now, obviously, everyone could be aware this week, the next couple of weeks, with US clocks have moved, we're out of sequence, so all sessions are open now. The main market is opening at 1:30 UK time rather than 2:30 UK time. So those moves at 1:30 have really been setting the tone for a session. We've seen quite sharp moves as the cash has come in, which has been giving a sort of a better idea than perhaps what the futures have shown across the morning. The mood of, I suppose, Main Street as they come in the States has been a bit different to that exhibited by Europeans and Asians across the all sessions markets.
So let's have a look at one of your favorite unsung heroes here on the IG platform, the shares page, and we are now.
It's a sea of red. Good Lord, look at that this morning. There's no bright sparks out there, are there?
Well, it's. But it is mainly a sea of red out there, and also Blue Monday. Are we calling it Blue Monday? Red Monday. But the usual suspects. At the top of the list there, your Teslas, your.
It's the continued stories, isn't it? On AI, is that was AI overdone? Are we looking at a sort of a fundamental reassessment of value on AI? Is how much do you pay for the winners in AI? And it's this kind of unfolding. I think it's interesting when we talked about Palantir's blockbuster move after its results 3 weeks ago, and it's been. We had a 20% pop on the results. I think we've been one-way traffic lower ever since. It's kind of sort of this strange reassessment. Earnings are meant to crystallize sort of your view for the next quarter. In fact, that the moves after the earnings have been the wrong ones. Look at that.
Just whacking up Palantir for you. I mean, look at that. It has just created around the 20th of mid-Feb, and then it's just
which was their results. A 20% pop on the results.
Yeah, and then it's just wallowed at that 8225, 8226 level, unable yet to defy gravity then head back up again. I think quite a few people on this chat have Palantir on their books, so let us know what you're doing with your Palantir. I do have this in my long pension. These sudden moves here don't worry me too much. What does worry me is, for example, if it loses its moat, if we start to see more competition come in. And if you like this sort of play as well on AI, have a look at Cognizant as well. They're in blockchain, heavily into blockchain used in healthcare. So that if you have an issue with your well, he's very fit. I maybe am not. I have to run across the bridge every morning to try and keep that in. I know everyone in the gallery is going, Ange, there is a train, you don't have to run across, but I'm doing that on purpose so that I,
No, everyone's scratching their head going, blockchain in healthcare.
Well, yes.
Now, come on.
So what happens, or what will be happening and is already happening, is Cognizant sell the software where if you have an underlying, let's just say, for example, it's a very fit man, plays a lot of sport, but let's say you have an underlying knee issue, and you're telling the doctor, your GP in real time, about another issue that they're checking, right? It's not confirmed yet, but you could have.
I don't need the blockchain to do this. I'm going to do a nice little
watching the
segue here.
reason-
Oracle results tonight have been doing this for a long time on integrated databases. The point of the blockchain was for that. If you are worried about people fiddling with your ledger on my knee injury and changing the details of my knee injury, I would see everyone who's made a comment about my knee injury.
But it gets better than that because now it's listening in. It's listening in, and it can give Matt Arbour real-time and the GP real-time information as to how much your insurance premiums should be.
Should be.
Yeah, should be. So we've got all that safety stuff already. That's old hat. They want the new stuff where they can charge you more premium if you didn't at that point say, yes, I'd like to buy the insurance right now before the results of that test come out. That's what they're doing. And with AI, they can now listen into your consultation.
Okay.
Right.
What was I going to say? I was going to say, like, we keep on concentrating on the indices. Actually, the other big story of the past couple of weeks has been the dollar, which we spent since November. It's been a strong dollar story, and since end of February, certainly in March, accelerating. It's been anything other than a strong dollar story. Look at that. There go straight to the dollar index, which not something that people tend to trade, but shows it. Quite succinctly, the sort of the change in tone in the market.
And really, this is, to me, quite expected, really, because a lot of that strong dollar, the whole election Trump thing, was all baked in the back half of last year. And I think essentially Donald Trump can risk the dollar being weak, although he's promised, a better make America great again, make Americans feel like they're rich again, right? He can afford to have that happen in the back end of his time in office. So therefore, beginning, when he's now, laying it on thick with the tariffs and everything, he can afford to have it weaken, right, to his favor.
But I'm saying I mentioned the dollar because you tend to get when it's that bigger story unfolding on longer term trends, the currency markets tend to have less of that retail noise coming on top. That the sort of you're seeing the change in tone come into the FX markets in the same way as the bond markets. I think the FX markets are always a bit more transparent to the average trader on our platform than bond markets. But those longer term trends you're seeing earlier across the FX markets than you will do if you're just looking at the S&P or the NAS, which will have quite a lot of noise in them.
Nice. That's a nice hack. Thanks very much, Matt. That is really cool. So you heard that here first. Look to the FX markets for early indications. It's also a big week for US data releases. The CPI, the PPI that Beecham says is not really. And of course, after the jobs number we had recently, the jobs openings might be more interesting as well. We also have a few notable names from the retail space, calls as well. Adobe, talking about AI and all that. We've got Adobe coming out. You use Adobe at all?
Well, it's hard to avoid Adobe, isn't it? Not cameras, more on PDFs. You're trying to just sending documents.
Yeah. I really hate the new Adobe PDF, print to PDF, and they don't make it intuitive, do they?
No, it's not.
Oh my goodness, especially on the mobile phone.
It's not good stuff, but
yeah.
Dominant players.
Trade chaos. I know we always talk about, trading the outcome, not the prediction here, but there's now this whole backlash as well that is starting to cloud the outlook. You're expecting to hear more of this, and Aaron Breitner and Martin were talking about this late last week. It seems like, or it feels like markets are starting to get a bit annoyed with all this tariff to and froing. What's your view?
Well, this I suppose they're kind of two ways of looking at it. Is the volatility as a result of what's being said, or is the volatility a result of people sitting on the sidelines? And we've seen liquidity come out of the markets, and I think it's very much a combination of two. But certainly half of it is that why would you sit there and be a participant when all this noise is going on? When it's flip flopping on tariffs, how do you take your longer term view? Are you not better to sit on the sidelines and wait for the opportunity and pick when to put your money in? So it's, certainly it feels last week with those moves that we've seen liquidity come out the market, and that's responsible for some of what we've been seeing.
That's right. Pick your moment. And just quickly, Matt, before we go, because I know you need to go for an important meeting, Bigger Beers here on the chat saying, what are factors that differentiate a retracement versus market sell-off? You want to start with that one?
I'd say it's perhaps a timescale thing that, market sell-offs tend to be characterised by the speed of it, whereas retracement is on a longer term, which be trending, but with the peaks is a bit more healthy. What we saw last week was very much a sell-off. That was sustained losses day to day.
Yeah. And very disorderly at the beginning of the week.
Yeah.
Very disorderly, quite something. In fact, I'm just also going to whack up the DAX before we go, because whoever traded DAX last week was a very brave.
Wow.
Brave. Listen, this is the
DAX. Yeah, I think the DAX last week was a crazy thing, wasn't it?
It was like a bucking bronco.
Certainly, you could go home at the end of the day with a position and overnight with no new news, and
here we go again.
Change.
Yeah. And on that note, thank you so much for being with us. All change, but no change for tomorrow, because we have Matt back with us on Tuesday. And happy birthday again.
Thank you.
All right. We have Aaron Bright coming up next, so stay with us. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, welcome back to Live from Trade Desk with myself and AA Rob.
Hello.
Welcome. It's been a while. I feel like it's been a while since we saw each other.
Yes.
And what is with the non-gilet?
Well, I've been banned from wearing a gilet in the
Why?
studio because it rustles a little bit because of the
Oh,
material.
it's Phil and Caleb that's banned you.
So I'm looking to see if I can get a non-rustling gilet, a non-noise-making gilet, and then I'll be back in my uniform quicker than you can.
Was it you, Phil? Right. They said it was Phil. Phil said it was aggressive.
Yeah.
Speaking of aggressive, markets last week were something to behold. And we were talking about this, last week, saying it's incredible the amount of volatility that's surged. Is this a case of investors and traders and markets now finally going, right, we've had enough, we're starting to get really annoyed with the seesaw, tariffs on, tariffs off, roll back, roll forward, tampering of which bits of the tariff are going to be rolled back, like we saw with the autos.
I think what it boils down to is markets like certainty, whether that's election victories, whether that's policy, whether that's earnings, whatever it is, they like to know what's going on, or they like to know what's going on in the future. They're forward looking. At the moment, the vision for the future is very clouded. They don't know what costs companies are going to factor in, because we're seeing a lot of flip-flopping over tariffs. We've seen Mexico and Canada have their tariffs put on pause. But obviously Chinese tariffs are still going ahead at the time being, so those ones haven't been paused. But there's also risks of it spreading across the Atlantic as well, tariffs being levied on the European Union. So it's just so much uncertainty that markets are having a little bit of a tantrum, because they're thinking, well, I don't know what to do. Are costs going to rise for my business? How can we factor this in? And what's going to happen in the future? And are they, is he going to potentially implement them, then take them away, then implement them again? So yeah, it's just a bit chaotic at the moment, and that's why you see markets move a little bit, as well as them being quite highly priced coming into the year. So we've got that frothiness, which we've been speaking about probably a lot on this show, and then you've got the uncertainty. So the froth is just coming down a little bit.
If, like us, you are struggling to stay abreast of all the changes out there, let's just quickly summarize what we know so far. Canada and Mexico, Trump's 25% across-the-board tariffs on its neighbors went into effect Tuesday, March the 4th. Then Thursday, the US then confirmed they would pause tariffs on goods and services.
And that's the confusing element for equities, really.
Yeah. Until April 2nd. Then this came a day after they hit the pause button on auto tariffs because the likes of GM, Ford and Stellantis said, please don't do this, you're going to ruin us. China, the initial 10%, there's mood music saying there's more to come, went into effect early February. Correct me if I'm wrong, this is the only one that went on schedule, same amount.
Yeah, I mean, Trump has always been quite keen to sort of put China in their place from his point of view. So that's why I think he wanted to just put those tariffs on the stage and say, China, you're getting your tariffs, end of.
Yeah, and we know markets, don't like uncertainty. China has, the nice thing has retaliated. Yeah. That is,
chicken,
at least
pork, all sorts of things like that.
Chicken, pork. At least that's expected, right? They did something that was expected, so therefore markets didn't really move that much, because China already did say we would retaliate. We won't just take this. 15% duties on U.S. farm goods. EU. Right, that's the next one. The one Trump's already said they are going to make the EU, cough up extra tariffs. I guess this coincides with his talk with Zelensky and Russia as well, suspiciously, so that he can pull the levers there.
Definitely.
The interesting thing is, this has been good news, or rather, has led to a change over in Canada.
Yes,
so, Aaron, take us through what's happened, and why it's historic.
We've seen Trudeau. He's been in power, I think, since 2016, so a long time, almost a decade in power. Does feel like a decade. It does feel like, whenever you think of Canadian politics.
Because his father as well. And
I believe, Trudeau, I think he was the first Prime Minister of Canada who was, or the first child of a serving Prime Minister of Canada born in office, something like that.
Really?
Yeah, I believe so.
because his father was in office when he was born. But anyway,
He had a long stretch as well, 9 years, right?
Yeah. I think he was in and out a little bit. But, obviously Trudeau's been in power, a long stretch, and we're now seeing a new face in Canadian politics.
Yeah, and the and let's whack up this picture.
It's your mate. Who's the new Prime Minister.
Darn it, Monkey Man! Because you're so in tune with the show, he guessed it right. I have to send you another gift, Arthur. Well, this.
I think it's brilliant where that picture was taken of all places. That's actually Davos. So.
I worked something like insane, like a 15-hour day there, and if you. Is that it? It was like, is that it? Yeah, it's far longer here at IG. And what happens is if you try, obviously I missed the dinners and everything because I was trying to get something delivered on deadline. And if you miss the dinners and everything, there's no way in hell you can get a seat in any restaurant there. And so I went out to try and find a hot dog or the Swiss equivalent. And I just saw him. Like, it just was right there, and because I'd read so much about Mark, I kind of just went there and spoke to him. Like, I think he was kind of taken aback to, like, he was an old friend, because I'd read about what he did for Canada.
Is that when he was governor of Bank of England?
Yeah. And then I was in hot soapy bubble the next day. But it was that's another story altogether.
So are we expecting you to have a role in the next Canadian government then?
Oh well, I can always be chief. I look Canadian. Do I, Phil? Well, there are a lot of Chinese in Canada. But speaking of which, Carney has said that we didn't ask for a fight, but Canadians are always ready when someone else
and I think
drops the gloves.
Important to note that he's actually got to have an general election in Canada within 7 months, because Trudeau's current government has been in power for I think 4 or 5 years, and whatever their term limits are over across the Atlantic are expiring. So whether he gets in or whether the Conservatives, who were rising in popularity, whether they get in, we shall see. So we should be interesting.
Yeah. The other interesting thing is, if not for Trump, I mean, Carney and the party, they were. Trudeau's time, they were laggards, weren't they? They were not favourites at all. But now with Trump, I saw a recent poll showing Canadians now put their concerns over Trump and the impact of Trump way above the economy, unemployment, right? So that's really changed things for politics.
Yeah, because I think it boils over into all those things, right? As you said, Trump's tariffs, if they do go ahead in Canada, are likely to have some detrimental impacts to Canadian consumers potentially.
Just having a look at Arthur Fox Haig as well. That's a really good question. In fact, something that I personally am taking up with the DevOps team. Arthur Fox Haig asking, is it possible via the platform to add a guaranteed stop sometime after you've put in your trade? Now, the short answer is no, and I'm kind of annoyed by this. So for example, Arthur, if you are trading the DAX, for example, and you want to go short, and you decide, oh, well, I'm going to put this in right now, I'm going to have my stop in place, my limit, if you play with that over there. Or some of you might like using, I'm a big fan of the risk-reward ratio drag and drop here, because that's a lot easier. I can tell you though that once you place the deal and you want to go back and put a trailing stop, you can't at the moment. I'm trying to get that changed, Arthur, because sometimes you want to catch the trade, right? And what I've found in the past is you can't go back and retrospectively put in a trailing stop or a guaranteed stop, by the way.
Yeah.
And also bear in mind, if you like executing and closing off your trades, Arthur, like many of our trader friends here, like Lazili as well, it does actually matter which platform and phone iOS you use. So we've been stress testing this, and it's far easier to close off. I'm not working for Apple, just putting it out there, but we found this in the past. It's far easier to close off multi-leg trades with your Apple than with your Android. But the short answer to your question is, unfortunately, no, I'm trying to get that changed because I quite like catching it very quickly, and then I go back and I put my stops and limits in the position page, but you cannot retrospectively put trailing stops in or guaranteed stops as yet. I hope that was helpful. Right, back to this. We were talking with Matt earlier on and also Chris. Volatility, they both sit in different camps. Chris saying that if the mood music on the markets saying that it's going to stabilize and go for the reverse, that means it's not going to stabilize. We're going to have a lot more volatility. Matt Arbour, helpfully, and always great having Matt on because he is head of vol products here at IG, saying that historically we are going to see this volatility be a bit sticky for a while. And just checking on the US 500 as well, because, we are able to see, adding that to our workspace, whack that up, Phil, we are seeing heightened volume as well.
We're not a million miles from correction.
Yeah. And just taking a look at the VIX people, because the VIX, here we are, and that is the daily, it is still climbing towards that 25 level, which is kind of the Richie Rich, heightened. Heightened
vol, yeah.
This.
I think I'm more in the camp that there's going to be stickiness in volatility. I think there's a lot going on in the world, geopolitically, economically, and there's a lot of uncertainty going on at the moment across various different countries. So I think, volatility could be here to stay. And it's also important to note that as I mentioned earlier, that we're at quite heightened price levels for markets anyway. So, there might be bits and bobs of profit taking or allocating resources elsewhere. And, we're not out of the woods in terms of, is there going to be a potential recession if there's concerns over growth, if there's concerns over unemployment creeping up, what tariffs are going to do to that, whether we're going to get any lingering effects from interest rates increases, which are going to be felt by the consumer, which I know that it's been sort of a couple of years now that we've seen hiking, but we might see consumer weakness grow a little bit. It's definitely got the potential to be quite a volatile few months or year ahead.
And whilst Aaron was talking about that, I'm just whacking on the volatility section for you, because you can also use this. There's nothing stopping you, trader friends, from using this as a good indicator of volatility, and we are seeing indications. This is the US 500, the contract for a weekly contract, 10th of March. You can go further out as well with the handy click button here at the top. And it comes down slightly, but it's still high. I mean, 42 is actually quite a high number there. Comes down a tad, but not by much in the coming next contract there. But also, if you've got a Tasty account, you can also look at implied volatility or expected move there. Loads to watch this week. We've got CPI, PPI, what are you expecting all of that to tell you about the US economy?
Well, it gives an element of, what the US economy can do in terms of interest rate cuts, in terms of CPI, really, really important figure. We've seen lingering services inflation throughout the UK and the US, so it's going to be interesting to see how those figures look and how the first sort of couple of months of the Trump presidency, what we've seen in terms of what are the drivers of inflation, whether it's at an appropriate level. I think we're still forecasting, I think maybe one, at most two cuts at the minute. That's what swaps are pricing in, but things can change when we get a CPI print. So I've always been in the camp that as long as inflation lingers, central banks will be cautious when it turns to cutting rates. And Jerome Powell has said that they're in no rush to do so.
Yeah, they said, but I think it was US economy in a good place.
Yeah.
Right.
But things can change massively, and if we get a CPI print which shows sticky service inflation, then Jerome Powell might say, well, I'm definitely not going to rush, and then we could see even more volatility. So a lot of prongs going on. A lot of it's multifaceted. All this volatility, I'd say.
It's like a kaleidoscope, looking
Yes.
at a kaleidoscope and trying to trade.
You don't know where to look, and it's all changing.
At the same time.
Yeah.
Speaking of which, I'm surprised that, let's have a look at gold now, because gold, just adding that to my workspace, gold is starting to resume its move upwards, as you can see here with that white trend line that I've put there. But I'm surprised it didn't climb more, given what we've seen in the last
I
week.
think there's elements of still profit taking from gold. I'd argue.
It's one of those interesting ones too to watch, especially with what Matt was saying earlier on, to get an early signal or a heads up rather. He says always look to the forex market.
Yeah.
And so we are seeing this continued weakness in the US dollar, whacking up the daily chart for you there. And it looks like, if things continue as they are, it's likely to drop further. What JP and gang say about the US economy, strangely, doesn't really hold water anymore, not like in less volatile times, right? Normally, when we don't have such uncertainty out there, if JP said we're in a good place, things are going well, markets
you'd get maybe 1%, 2% in the Nasdaq in a day, maybe.
Yeah. Whereas now, last week we saw weekly losses, right? This continued concerns around...
Kaleidoscope rears its head.
That's a good article headline. Lots of questions as well on the chat chiming in here. Monkey Man asking, can you add the stop on the ISA accounts?
Well, the ISA accounts are share dealing, so yeah, I believe so. You can do anything, in a share dealing product, as if it's in an ISA wrapper, really. But obviously, there's no spread betting or leverage inside of an ISA.
I'm glad you brought that up as well, because trader friends, for those of you like me who watch that space, April 5th is coming up. And don't forget, that means ka-ching, you get another 20K to invest in the coming year.
And nothing rolls over, so you have to make use of it in the tax year.
Yeah, but
so that's very important.
That's very important as well. I always, maybe you guys can help me here. I have this difficulty in managing all my ISAs. Do you just, put the old ones into the new ones? I know, Aaron, you're saying, don't worry, Ange, you won't get the tax, man or tax woman hounding you because they know. But do you do that? I tend to put them in separate pots because I just like to know.
I think I've got a few ISAs, yeah.
What's growing because of what, right?
Yeah.
But tell me your strategy, because I'd love to hear it. The Ong ISA universe is spiraling out of control.
Yeah, and I think, we've seen recently that the laws on ISAs were changed, where you could only open one ISA per tax year, one type of stocks and shares ISA. Now you can open unlimited amount per tax year. So you could, it's still the 20 grand limit, but now you could open, say, 3 stocks and shares ISAs and say, okay, I want one to be a smart portfolio, managed portfolio, one to be a stocks and shares dealing, share dealing ISA at IG. So you can open 2 in a tax year.
Yeah, and we're going to get you on for another segment before, April 5th to talk about. Because am I not right in saying the smart portfolio, now you can even move it in and out, and as long as you're still within that 20K, you're not going to get penalized.
Yeah.
Before, if you moved it out, that was it.
Well, yeah, we have a flexible ISA, so you can take money in and you can replenish that amount of money in the tax year. So that's a really nice feature that the IG ISAs have is, you're not penalised. So if you put 100,000, you take 100,000 out of an ISA, you can put it back in within that same tax year because it's seen as just replacing existing money. Obviously, in the new tax year comes along and you've taken that 100 grand out, you can only put in the new 20K in.
Yeah, for your new Aston Martin. James Bennett chiming in here saying Scott Besson has essentially told the market what their intention is. A period of detox. Move from public to private spending. This is a fade the rally market for stocks. What do you think?
Yeah, interesting point. I just think we're given the rhetoric and, as you said, kaleidoscope, I think, there's going to be a lot of volatility. And I think this is what I expected coming into the year. Probably not quite as much uncertainty over the tariffs, but definitely volatility with Trump in office. Because he just says interesting things, which
Yeah.
can move markets.
Yeah, I'm hoping that whole Doge thing as well is a period of detox, right? Because, you know, obviously it's really tough, and I really feel for those people caught up in this. But
Yes.
lots of Americans, there's also a section of Americans say, you know, and we don't have these EYs that come in, or, you know, BCG consulting every year or 2 years to kind of sort out the wheat from the chaff. And there are swathes of America that say actually no one's done it. No one knows whether, you know, these people working there, have they got a pulse? Are they still breathing? Are they still alive? Are they still doing the work? And so there are some out there. A school of thought is that this is a clear out, right, and then start from new again.
Yeah, and I think, look, Trump's very keen to get some of the deficit down, and that's you know what him and Musk are doing by getting rid of some public sector jobs, which they see as unnecessary.
I mean, this is the other thing that I can't quite square the circle. Trader friends, maybe you can help me out here, because it does impact my trading view. All this trade posturing, we all know that it's going to have ramifications for inflation, i.e. up. And that in turn could influence, you know, what the Fed's going to be doing, right? i.e. push rates down.
Yeah.
Then that to me kind of just says, well, then if that is going to happen, then we're going to see correction, but then essentially the stock market rally still stay in place. What's your view?
It's a very difficult one to forecast. Look, I think a lot will boil down to policy, to geopolitics, to really companies what they believe their earnings are going to be, and if they can deliver on earnings growth. I mean, if I was a business and I was facing, you know, increased costs, you know, you're going to have to think of ways to sort of ensure that your earnings are growing, whether that's cutting jobs, whether that's doing all sorts of things. So there is definitely concerns around that area. But yeah, I definitely think we could see sort of continued volatility in this environment. And yeah, look, tariffs certainly, as you said, definitely have the potential to add to inflation and cause inflation to be sticky. And we know, you know, since COVID, I'd say, you know, even more so, we've seen equity markets really look at rate cuts as a sort of, I guess, as a sort of signal to rally, because, you know, the mathematics of it is all down to sort of discounted cash flows when you cut interest rates for these future earnings of these companies. And if we're not getting those rate cuts in a sort of appropriate time frame that the market is priced in, absolutely, you could see sort of more volatility in that area.
You know, we saw stock markets slump last week. We also saw a swathe of, you know, stocks also fall, including the Palantirs, the retailers. What was interesting was, for the first time, when I spoke to my cousins in the US at the weekend, they all mentioned the markets. They all mentioned, you know,
the volatility.
Yeah, and they all mentioned that R word that I hadn't heard since, I don't know, summer last year. What's also interesting is that this comes at a time when we are at risk, or at least we've heard there's a threat that Lutnick might slam 25% tariffs on steel and aluminium imports from the EU by this week, midweek maybe. And so, you know, the way in which this is playing out, to me, isn't going to deliver more money in the pockets for Americans. I kind of think it's going to be less money in the pockets of Americans. And on that note, there are three big economic reports to watch out for. Mentioned earlier, the CPI figure that's due Wednesday.
Yeah, this will be an interesting one.
Before markets open, I'll be here. Rich will be in Cheltenham.
He'll still have it on his phone, I'm
spending
sure.
his winnings. What?
He'll still be checking on his phone, I'm sure.
Yeah. But I think the what's interesting is, he was saying earlier, the timing coincides with a major event at Cheltenham, because he's done this before and kind of like not sure what to do. Yeah. The PPI And after that is due on Thursday again before markets open, so watch out for that. Expectations, smallish gains there, but you know, it's the core that we are looking out for. Core CPI expected at 3.2% year on year. If we have that, much hotter than expected.
Yeah, particularly from services, I'd say.
Yeah, especially services, because boy, is it still painful for most Americans there to do anything like eat out. I mean, a coffee was like $7 in some places.
I've got a friend in New York who pays $80 for haircuts.
Oh my goodness me. Is it a nice haircut?
No, it's quite normal.
Some comments coming in thick and fast on the chat. Monkey Man saying there is talk of only allowing 10k in a cash ISA. No, it doesn't concern many of us. It does concern me, but need to keep an eye on that. Yes, it does concern me because I was very, very surprised Rachel Reeves did not have a raid on ISAs last year.
Well, we've got a new budget probably soon, so
yeah,
keep your eyes out.
Yeah,
they seem
but
to be,
Luke Moore and all the PCMs there who were watching the budget along with myself and Rich can tell you that they saw me like whacking in stuff into ISA before she started speaking because I was really concerned that there would be a change in ISA laws. Ian Holmes saying 20k ISA, 60k pension. Thanks very much for reminding us. Our Sachs, and I have multiple ones. Use them according to the benefits in terms of commission and FX, like dividend reinvestment in a no commission environment. Also keep FSCS limit in mind.
Yes, that's very important.
Oh, what is this limit?
£85,000 in a bank account. So if the bank goes bust.
That.
Yeah. So otherwise you've got £1 billion in a bank account. You'll lose it if the bank goes bust. You'll only get 85 grand back.
Clearly, that is only a problem that our Sachs has. And on that note, we will be right back. Stay where you are because we are coming back with market measures with Rich.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Right, we got an exciting 15 minutes, so buckle up. First of all, we're going through market measures. implied volatility, part 2. Then we're going to have a look at DoorDash, right? I've just managed to buy some stock pre-market. We're going to have a look at that and its expected move. And then I'm going to give you a little trick for Cheltenham with the form guide and also my nap of the week, because I am on the train in 3 hours on the way to Cheltenham and I cannot wait. So here you are, is your market measures of the day. Beginners option class trading. This is number 11. We're already in class 11 of 35. Implied vol part 2. Let's get straight in. Now, in part 1, we defined implied vol and its role in options trading, right? We looked at it on Thursday. However, traders rarely assess implied vol alone as it lacks context. For example, a 30 IV could mean different things depending on the history of the underlying, on the beta, on everything, how the market is in particular. Instead, so we use various metrics such as those found on the Tasty platform, right? Everything here is available on the Tasty platform and really useful to use. It contextualizes the volatility for specific assets over time. We're going to teach you about IVR and IVP. So, what do we have? Well, IV rank gauges the current level of IV relative to its range over the past year, right? So, if XYZ has had an IV between 30 and 60 over the past year, and it's currently at 45, that means that stock would have an IV rank of 50%. Okay, so normally think of it like an RSI, in that under 30 it's interesting because it's low, and above 70 it's interesting because it's high, right? So that IV rank tells you it's more of a gauge of how volatile that particular instrument is relative to its own history. Now, of course, if you're selling options, it's interesting to do when that IV rank is high, as a general rule. Okay, because you want to sell a high vol option and then make money as the vol comes down. What about the implied vol percentile? Right, this calculates the percentage of days in the past 52 weeks in which the IV was lower than the current value, right? So where is it in the percentile? 80% would mean for 80% of the days in the past year, we've actually had lower levels of IV than it is now. So traders use IV rank to determine if current implied vol is high or low compared to its past range, while IVP helps assess how often implied volatility was lower over a specific period. You have to activate these things in the settings, right? So I'm going to show you on the platform after class how to activate all this into your settings. Settings is really important in the Tasty platform as it gives you a whole range of metrics to add to your portfolio or to take them away if you don't like them. Now, so those are the two basic metrics used. They're often confused by new traders, right? So let's summarize the differences again. R and P both measure the current implied volatility against its historical range. R and P provide context around how high or low the current implied vol of an underlying is. The IVR is a simple range-bound ranking system and changes more often day to day. The IVP is a weighted calculation, right? The total number of days. So it's much more smooth. As the day a year ago drops out and the new one is added, of course, it's quite a smooth calculation. Just because R and P are high doesn't mean extrinsic value will be. All right, that's important. Just because they're high, that doesn't mean suddenly the extrinsic value will be. Always check the IV percentage along with IVR, IVP to determine a potential opportunity. And that is one of the things we're going to look at, right? The per expiration. Now, this is that really handy metric, especially going into a set of numbers, that gives you that extra clue as well. So the standard implied volatility metric displayed for the underlying is calculated using a 30-day expiration cycle. Okay, this is where we get the expected move for options in the expiry. So it's calculated using weighted option prices and volatilities across different expiration cycles. And the calculation is beyond the scope of beginner options series. So you don't have to worry about the math, right? My perfect situation, because I don't like the math calculations on these things. I'm just like being told, just feed it to me. However, it's important to know about IVX as this metric determines the expected move of the underlying at that expiration. And that is what we're going to look at in DoorDash today to give me a little bit of an idea, right? Because it's getting added to the S&P 500. The stock is up 5% pre-market. What does that look like compared with the expected move for the next expiry, right? Is 5.5% move big? Or what is it likely to do, right? I bought those at 8:35 a.m. What's it likely to do at 1:30 today when the market opens? What about HV and IVHV difference, right? The historical volatility measures past price deviations from the mean. That's calculated as a rolling standard deviation of daily returns, reflecting the volatility in the past 30 days. This provides insight into volatility that an underlying has seen in the past 30 days, but it's no indication towards future expectations. And then we've got the difference, all right? When historical and implied vols align, premiums are fairly valued. However, large IV minus HV differences suggest deviations traders can look to potentially exploit for option strategies, right? Now, this is the funky stuff that you have to choose to add to your portfolio. I'm going to show you that in a second. And the 5-day change, right? So the 5-day change in IV, really useful. That's another metric vital for traders as it reflects the short-term sentiment shift, right? Spikes suggest uncertainty or upcoming events, right? There's a lot of that around right now. So we would imagine that the 5-day change in most IV ranks at the moment will have moved. And this change influences options pricing. A positive change in IV means pricier options, bigger premium for us to sell if we're selling options. A negative change in IV means cheaper. Understand these shifts aid risk assessment and strategy refinement for effective trading decisions. Now, we've got to make sure that this 5-day change is selected in the watch list, right? Now, takeaways. So let's summarize all that because we've been through 5 really important things there. IV is a key options metric, right? So really get your head around these last 2 sessions, class 10 and class 11, implied vol 1, implied vol 2. Now, today we've looked at IV rank, and that shows the current IV relative to its past year range, guiding traders on when to sell or buy options. If an IV rank is down at 15 to 20, you might actually look at buying those calls or puts if you think that the implied vol could be wrong, could be too low. The IVP calculates the percentage of days in the past 52 weeks. The IV was lower than the current value, right? So it's measured as if it's lower than the current value. Implied vol per expiration, that gives us this expected move. Historical volatility respects past price variations, but not the future projections. So that looks at how accurate that implied vol was previously. and then changes in IV, right? Let's look at adding that 5-day change to the platform and how you do that, because it's unlikely to be in there as a default. That influences options pricing. Positive changes indicate higher prices and negative changes suggest lower prices. Okay, so let me come out of that and into the platform. And you can see here, I've gone into settings. Okay, so settings, go down to watch lists, and let's add this 5-day change, because I haven't actually had it in my platform before. All you do here is click on it. Okay, click on the 5-day change and drag it across, and we'll pop it in there next to the IV index. So there we go. That's it now in there. And when we have a look at DoorDash, you'll see the possibility of seeing it. Now, why am I looking at DoorDash? Well, today it has been added, well, Friday night after the close, it was unexpectedly added to the S&P 500. So I'm going to look at all expirations for DoorDash, and then what we've just been through, right? The IVX, 63.1%, but that's $15, nearly $16 of change up until the March the 14th, right? So that's the weekly, 4 days away. The expected move is $16. So it being added to the S&P 500, I would fancy that that is a positive story that people weren't ready for. And the stock trading currently at 178 close on Friday night. I just bought it at 187.5, I think. So yeah, so there we go. 75 shares at 187.5. That is my position. So, you know, not huge, but we're having a go. And I think we could see DoorDash up as much as 7.5%, 8% today, depending on you know, how obviously the day goes, because the NASDAQ not looking particularly pretty right now. So that is market measures for the day. I'm about to run and jump on a train. Where is he off to for the next 2 days? Well, there it is, the Cheltenham Festival, and that is the guide that I use, right? So you can find it on lapoftheodds.com. If you're looking, if you enjoy horse racing and you're looking for a nice a run through of every race, right? This gives a really good run through of everything that Daniel Watkins expects. But I've gone to Wednesday for the Coral Cup. And the reason for that is our good friend over at Tasty Trade, Anthony Batista, known as the Bat. Well, there's a horse running, a big outsider called Beat the Bat. And that is going to be, as Daniel Watkins says, Beat the Bat offers a good each way outlet if squeezing into the race. He could even be 20 to 25 to 1 if he's running. Not sure if he's running at this point, but 25 to 1 for Beat the Bat. Get on it before Sosnoff does, because you know that he's going to be a fan of that name. Right, that's me for the week. Have a fantastic, well, not for the week, sorry. I'm getting ahead of myself. Giving Angeline a heart attack, I can hear her. Yeah, I will see you on Thursday. Be back in the morning, first thing Thursday. Have a wonderful week. Keep that wrist tight, because volatility, as we can see, is rather hectic at the moment. And yeah, we're looking down 1% on the NASDAQ this morning. Maxime next, joining Angeline. We'll see you on Thursday.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Hey, welcome to Trade Expectations with myself and Maxime, otherwise known as Clark Kent of IG until he becomes Superman, like now.
Yeah, or Zim apparently, but more on that later.
Speaking of later, you heard that interview I did with Nicola.
I did, yeah.
And
I heard the slander.
Oh, the slander. It was actually a really, really big compliment. So I said, for those of you that didn't catch that on air on the female takeover at Trade Live with IG, I said, I love walking over because they are my vanguards, the PCMs and the vol desk, and especially the way Maxime sits. Because if he is slumped over like this.
You know.
I know.
Things are going. Or the other side of things is when if I go like this,
and he's
in the chair.
Yeah. And then the PCMs
You know
are,
markets are volatile.
yeah, and the PCMs are all stood up with their headsets on. Luke, Audie, all have their headsets and they're stood up. For me, that is like red flag, red signal, vol is up, something's happening, something's changing.
And the volume level goes up on the volatility desk side, especially in that corner where Matt and Elliot sit.
Yeah.
That's how you know things are kicking off.
Yeah. And Elliot and Matt Arbour, a bit harder to read because Matt Arbour has the default chilled out, right?
Yeah, well, yeah.
Yeah,
He doesn't. The engine doesn't rev up as quickly as for some.
Yeah, I would love to know that trait. He's always like, whether vols up, vols down, he's always got this like default chilled out. Must be the hair. Speaking of which, markets, you know, the volatility that we saw last week, everyone asking here, are we going to see that continue into this week? What is your call?
I think so, because we've got a number of economic data prints coming out this week.
And you probably can give us a better idea than most because you were here the weekend, weren't you?
I was working, I was covering the weekend shifts. So we do offer a couple of markets over the weekend. So you can trade the DAX, the Nasdaq, the Hang Seng, the FTSE, as well as gold and euro dollar, cable, and dollar yen over the weekend. And obviously we're very reactive to any news that come out over the weekend because we're pricing this ourselves. So it's purely a market making exercise. And we did see quite a few trends over the weekend, I'll put it that way. So the first of those was on the old DAX. So over the weekend, the German CDU and the SPD, who are the two largest political forces in the country, essentially announced that they had reached an agreement on forming a coalition. So quite a bit of buying off the back of that. Not necessarily, not necessarily paid off given the open this morning on the DAX. I mean, DAX futures are
down a third.
Quite a move, yeah. But that was one of the trends we saw this weekend. And the other one, which is probably the more important one in the grand scheme of things, is dollar sellers.
We talked about this with Matt earlier on, and just whacking up the dollar basket for you guys. We are seeing this continued weakness in the dollar. This is the US dollar basket here, people.
Yeah, so definitely a trend that's been expressed by our weekend traders over the weekend. So the bulk of the business was short dollar yen. But we also got a couple of cable buyers and euro dollar buyers as well over the weekend.
I mean, this to me is a really weak dollar picture continuation.
It is.
Right.
Not necessarily going to be helped in comparison to other currencies, especially the euro and the yen. Obviously, large spending plans being agreed on in Europe, sort of a reindustrialization plan, both on the military side of things and on general infrastructure bills, most notably in Germany. So with the uncertainty surrounding the dollar, it's hard to see that trend reverse. I was speaking to Axel just outside before coming in, and he definitely shares that view that long euro dollar, long cable and short dollar yen.
Here we are, euro dollar, putting that up for you.
It's a bleak picture. So that's definitely something that we see.
I mean, the other thing with trading the euro here is, bearing in mind, we might see, this is the expectation anyway, so it's not fact up, but we are expecting to hear about the latest in terms of tariffs on Europe, notably steel. But, you know, also, I guess, the big thing this week as well is the key economic data that we're going to get out of the US.
Mostly out of the US, yeah. So while the big one is CPI, obviously, but there's a few other economic prints that will be very interesting to follow. So obviously we had NFPs on Friday. It wasn't an amazing number, but it wasn't terrible. One thing that may have come out of that is the realization that the government sector hiring freezes may start to have an impact over the next couple of weeks or months. And one particular indicator that will be helpful this week is the JOLTS job openings print, which is coming out on Tuesday, if I'm not mistaken. So if we see a significant decrease there, especially in the public sector, then it could mark the start of a trend. And then, well, obviously, business confidence is key in times like this. So obviously, there's lots of uncertainty at the minute regarding, US manufacturing firms. And one indicator that's not necessarily being talked about much and that generally doesn't have a massive impact on markets or barely even moves it is the small business confidence. NFIB small business confidence, which is coming out on Tuesday. And attached to that is also the small business hiring expectations. So this could be a really key indicator to keep an eye on to try and establish whether the sluggishness of the jobs market is going to be continued on the small business side of things.
I'm pleased you brought this up. That's right, because for those of you who are not au fait with the NFIB, it's usually not one of those that moves markets. It's normally like B list, right?
Exactly.
But given the time that we're in at the moment, given the uncertain trading environment, small things like this can make big moves. And the new NFB survey, if you don't know where to find it, just Google it. And I've put it up on the screen here. This is a survey that has been ticking up early in the year, but now there are real concerns out there that small business owners, if they start feeling like things are going against them, we are certainly hearing that R word creep back in again, that R recession word.
Exactly, and then Jerome Powell may come in or not to intervene. They've been very clear that they want to take their time, but.
Yeah, he said, in a good place, economy in a good place. But as Aaron Bright was saying, this could change overnight, right?
Because they are data driven.
Exactly.
No, so obviously it's not going to be a seismic number, but interesting to keep an eye on to sort of gauge the conditions out there.
Yeah.
So this is essentially a number that tracks, small business confidence regarding labor, wages, inflation, the current status of inventory and sales. So it's a good all-round indicator of small business confidence.
It also gives us a good idea of how the smaller businesses, whether or not they're thinking about hiring or whether they're thinking about firing. Inventory gains also a key area to look out for because, CapEx spending, anything that's big expenditure, big ticket items, if that weakens off, that is considered a negative. Chris Beecham and I are talking about a lot of these historic sort of comments regarding the markets, and, we just talked about one. Vladimir Lenin, I believe, said there are decades when nothing happens and weeks where decades happen. Resonates with the markets. I feel like we've had that week.
I saw someone say the other day that we've had about 4 market cycles in the last 2 weeks.
It's been mad, absolutely crazy.
It's good times to be if you're a short-time trader, then it's probably the ideal
is great
conditions.
for the intraday.
If you're a longer-term person or buy and hold kind of investor, maybe you want to weather that storm and see where we go. I guess obviously very interesting times to be in. And in weeks like this, where all this data is getting released pretty much back to back. So every day we have, apart from today, every day we have a key number coming out. You can really expect volatility levels to heighten. And this is when, especially when markets are nervous. Then again, I was speaking to Axel just before, the fear and greed index is an extreme fear territory. So that's when you could see those extreme moves, especially in case of a lower than anticipated number.
What's also key is that, we've talked about this a lot on this show, not just the fear and greed index, which I'm showing you right now on the charts here, but also the US lead in longer term trend growth is almost like not a given anymore, and investors seem to be re-rating European assets. Is that still the sense that you are reading on the markets?
Yeah, absolutely. So we're definitely seeing quite a lot of business on the DAX, but also, you have those wider indices such as the Euro stocks which gives you exposure to all European economies as opposed to a particular one. But there's this sentiment that obviously Europe has a probably once in a generation opportunity to sort of regenerate and take a lead in both in geopolitics or international relations, but also a great opportunity to sort of restart its industry to sort of do away with the bureaucracy that's plagued the economic growth for a number of years. So it could be a significant turn. But then, I mean, the US economy, in the grand scheme of things, it still is the backbone of global growth. So I think if you're a longer term investor, it's not as seismic of a shift as you might think. But it certainly is on the diplomatic side of things.
Well, that's right. And that's why the second tier data, the B-list data from the US is likely to be watched. At the same time, we've got a few other pivot points this week. Canada could cut rates on Wednesday. That's a real potential there. And also watch out on Wednesday or sometime midweek. I don't know about you, but I'm hearing from the desks across the city, many of which I've worked at before, saying that that everyone's kind of on standby to see what Trump does in terms of tariffs for Europe. On Sunday, Trump also declined to predict when or whether or not the US could face a recession. But I can tell you that many of my US cousins have started saying the R word, and suddenly they're all kind of waking up, going, oh, what's happened with the markets last week?
Yeah, well, allegedly Trump doesn't look at the markets, right?
Yeah.
But
I'm sure he does.
I'm sure he does.
He does.
But no, listen, I mean, Powell was somewhat reassuring last week on that front. So we'll see whether this is vindicated in the data that comes out this week. An also interesting thing to follow on the global scale is the wage negotiations in Japan. So there might be, if they go through, this will essentially secure a 6% increase in wages in Japan, which would, over the past 3 years, essentially form the largest wage increase in the country since the housing bubble in Japan. So this in turn could essentially incentivize or confirm the BOJ's intention to increase rates at a higher pace, which in turn doesn't really great for the dollar yen in the grand scheme of things.
Perfect. On that note, we're going to have to go because we've run out of time, but some key takeaways here. Look out for Japan, dollar yen as well. You heard it here first. Concerned about a bubble there. Fancy that. And also keep an eye on the big US data that we're getting. We have Axel up next with Trade of the Week.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hello and welcome to Trade of the Week on Monday, the 10th of March 2025. And let's get straight into it. I would like to go long the S&P 500. Yes, I know. Everybody's been selling it for the last few weeks, and we even had a short NASDAQ trade we wanted to put on a few weeks ago, which would have worked out really fine had we gotten into it. But anyway, let's look at this week's Trade of the Week. Why long the S&P 500? Well, basically, as you can see here, on Friday, we dipped down to our key support area. Can you see here all these highs going back to July of last year and the highs from August and September of last year, and also the early October and late October lows here and early November lows. They all come in at around the 5,670, 80 area or so. And this is exactly where we found some support on Friday. Now, we formed this hammer formation, and obviously the hammer formation is a bullish reversal signal, but only if it gets triggered, only if we rise above the high seen on Friday. So we haven't done that yet because we're doing Trade of the Week on Monday. But since we held at that key support area, and because if you look at the Fear and Greed Index, this is the CNN Fear and Greed Index, and you can see that on their website, it's freely available. We've been in extreme fear territory for the last 2 weeks, and that quite often acts as a contrary indicator, at least in the short term. And because if you also look at the CBOE put-call ratio, which is also at 2-year highs, all of that seems to suggest to me that short term, at least, we could see a bounce back. Now, obviously, we could be wrong, but we're only risking 2% of capital per trade. So what's this week's Trade of the Week? for these technical reasons, for these sentiment reasons, what I would like to do is to go along the S&P 500 at 5,710, so at current levels, with a stop loss not just below Friday's low. Ideally, I'd like to do that, but in case today we have a bit of volatility, we go slightly below it intraday, maybe put our stop just below 5,600 here, leave ourselves a little bit of breathing room with an upside target around the 5,800 or 5,900 area. So a short-term bounce back in this now downtrend that we've seen over the last 3 weeks. Now, with regards to trade of the week, as you know, in January we had 4 trades go wrong, which was awful. We got stopped out several times by a small margin, but that was it. And we stuck to our guns because even though we were down over 6% on these 4 trades, and even though in February we had 4 trades where we were dead right, we only managed to get into one of those. We actually made all our January losses back with that one trade. Because if you look at euro dollar, you can see here, we went long euro dollar on that Monday, the 10th of February, and we have now hit our upside target. We're coming close to my first upside target here, which is the November high, and above that the 110 area. Now, because I'm going on holiday and because I can't watch these trades whilst I am away, I'm going to cash this trade in. But personally, I think it's going to go much further. I think euro dollar can go to 110 and much further than that actually over the coming weeks and months. But let's just say we get out at current levels from our long trade here at 103.26 at 108.55. And we also had last week's trade, which was long the Australian dollar versus the US dollar, and we did that long one here. We bought it just here, and we're right on that one as well, and we can cash this one in also at 63, I don't know, 28, whatever here. So if we were to cash all our trades, the long trades, euro dollar and Aussie dollar in, we would now be up by over a percentage point since the beginning of the year, wiping out all those previous losses because we stuck to our rules, we stuck to our guns, we managed our risk, and we knew that with our strategy in time, we would get some winners. So this week's trade of the week, just to reiterate, is to go long the S&P 500 with a stop loss just below 5,600 and an upside target between 5,800 and 5,900. Welcome to Technically Speaking, where I answer your technical questions on your trades, on your charts, on what you would like to look at, mainly based on technical analysis. And as I've just shown here with my trade of the week, what you can do when you look at charts is look at previous support and resistance levels, but also look at market sentiment, because it can quite often act as a contrary indicator, at least in the short term, and therefore it can be quite useful. So let's just answer some questions. I haven't got any questions yet. Well, that's the first. So if you want to send questions in, please do so. What I could do in the meantime is perhaps look at some markets and see how they are looking. Now, let's start off with the German DAX 40. It's one of my favorites. I trade it all the time, as you well know. And you can see here, I've got a 5-minute chart up here. And right now, what we've seen is potentially the pattern we discussed last week, this ABC correction. So we have a move. The overall trend is still up from a few days ago, and then we had a corrective move down, and then this morning we had this ABC correction down, this zigzag, where you can see this distance from here down to there is similar in length to from there down to here. So that's your ABC correction. Then we had a buy signal here. And this pattern only works half of the time, but basically if you get stopped out, your stop is just below the last reaction low, that's this one here. Very tight stop, we nearly got stopped out, but then the DAX went up, and right now we are up. So what you can now do is, because we went up by the distance of our initial risk, so imagine we had gone long here on the break above that previous negative candle at 22,806, our stop loss would have been at 22,739, and then because the market moved up by the same distance as our stop, we can now move our stop to break even. Had we done that, we would have been stopped out at break even, so that trade would have been closed out. If you're not
closed out on that trade yet, maybe you want to move your stop to break even or just below the last reaction low, which is this one here. If you have a longer term view, what you can do on the 5-minute chart, we're talking longer term here, so the next half hour or hour perhaps, what you could do is perhaps leave, in that case, your stop down here because it's only a few ticks below that one. But that's how we use this pattern, and it creeps up on all kinds of time frames. So that's something I like to look at. But if we look at the daily chart, what we can see here is that the DAX, the German stock index, remains in an uptrend, is losing upside momentum though from last week's all-time record high on this daily financial met at 23,473. And we are currently testing this uptrend line, the previous uptrend line, which has been broken through. So I need to now remove it. And we'll have to see whether we can hold above this low from the 4th of March. So as long as we stay above there, and more importantly, the low here in mid-February, for me, this is still an uptrend. But I've got some questions now. I've got a question coming in looking at the Euro Stoxx 50. If we look at the Euro Stoxx 50, what is the Euro Stoxx 50 doing? Well, what we can see here is something similar to the DAX in that we did go higher. And then can you see here, these highs going back to mid-February were retested on an intraday basis. So we didn't close above those highs back on the 3rd of March and again on the 6th of March. But we haven't managed to close above these previous highs. So right now we're coming off again, and we're holding though above the last reaction low, which is the important one to look at. And that's also a hammer formation. So potentially it pointed towards further upside being seen. This hasn't come to fruition, but that would be my stop if I were long here at 5,502, just below that low here. Because if we were to fall through here, it is quite likely that the sideways trading range may continue, perhaps with wider volatility, and in which case we could perhaps retest the 6th of February high here at 5,364, or perhaps even the next lower one, the end of January high at 5,314. So right now we're just trading in a sideways trading range, and this may continue for several more days. I mean, it's happened basically since mid-February. But right now it looks as if a new all-time record high in the Euro Stoxx 500 is not on the cards, not today at least, because as you can see here, we're starting to come off slightly. Now I've got a question about JD Sports. Let's look at JD Sports. Now, don't forget, obviously, that I glance at the charts here. If I do proper technical analysis, I'll probably spend half an hour to an hour actually looking at the very long-term charts, at the quarterly charts, at the monthly charts, the weekly charts, at the daily charts, look at all the different trends, look at Elliott wave analysis, look at seasonality, look at all kinds of things to then come up with my forecast and my trades, or at least with the potential trades or hypothetical trades for clients. So it's not just sort of having a quick glance at things as I do now, but I can still give you a ballpark of what I think is going on based on the chart patterns that I look at. So the question here was, are we still in a downtrend? And I think you can answer that question yourself, because let me just get rid of this old one here. What can we see? Well, we can see a series of lower highs and lower lows. That's the definition of a downtrend. So clearly on the JD Sports chart, we are still in a downtrend. And I know I had this question a few weeks ago, and I said, well, you know, it's probably going to go further down. And that's exactly what happened here. You've got further downside. And I'm going to do a podcast later on today, and it'll be out soon, with Riz Iqbal, and you can see on there I'll talk about a trading strategy which I've been using for over 30 years now, which is based around the 30 period simple moving average. And you can see here I've got the 30 period simple moving average on here, and you can see on that strategy we would still have been short from up here in JD Sports, and we are still short now. So in case you're interested in that, you could have a look at that later on, perhaps this week or next week. Let me just look at the chart. Well, basically, Oh yeah, I've been asked what's the name of the podcast. Words of Wisdom is the name of the podcast. I've already been on there and talked about risk and money management, things like that. If you're interested in that, have a look at that. But let's look at the JD Sports longer term chart, at the weekly chart. Let's zoom out a bit. And what we can see here is that we've fallen through the October 2022 low, which is negative, because that is a key support level potentially, and we fell through there. So now the next downside target from a long-term perspective is probably this whole area here, which is made up of the July 2017 to December 2018 lows, and they sort of come in around 65 to 60. So, I mean, there's further downside to be seen here on this spread bet as the share price remains bearish. And you can see here we have 3 consecutive weeks of lower share prices here. On the daily chart, what we're trying to see is a bounce back, as you can see here today. But for me, as long as we stay on a daily chart closing basis below these highs going back to late January and February, which were made on the daily financial bet around 90.31 or so, the trend is still pointing lower. Now, Sarabi Gold again. My Sarabi Gold friend. Well, last week we were saying that we were in an uptrend, I believe, but that we had this bearish engulfing pattern to the downside. And I remembered correctly, this is the bearish engulfing pattern I told you about. And I did say that short term, it points to a top forming, so at least a consolidation being seen. And what we've seen since then is clearly here us coming down, retesting these previous highs, which now act as support. But interestingly enough, perhaps, and I'm not jumping the gun here because I don't know what's going to happen in the future, but perhaps this could turn out to be an ABC pattern, the pattern I just showed you on the 5-minute charts on the DAX. So if that is the case, what do we need to look out for? We've got this down move, move back up again, down move. If the distance from here to there is similar in length from here to there, it's slightly shorter at the moment, so maybe we'll get another down move here. But if it is similar in length, and you then get a buy signal, by which I mean we would have to rise above Friday's high here, above this high here, which incidentally might now act as resistance because it's also where the breached uptrend line currently comes in, and that, because of inverse polarity, can act as resistance. But if we were to rise above here, you could go long, for example, put a stop loss just below that last reaction low here. And then if the pattern is actually an ABC correction, we would expect a new all-time high to be a new high to be made here above the high seen in February. So that's a pattern you could perhaps trade. The problem is I don't know whether this ABC correction is long enough at the moment for this to be a valid pattern or not. So let's look at that again. Now, I've got another question looking at the gold price. The gold price itself in US dollars, you can see here what I just talked to you about, this previous uptrend line acting as resistance. And that's why you keep your lines, you make it a dotted line or something like that, but you keep them on your chart because they can be extremely powerful going forward. So let's look at how I did this. I used the lowest point on my chart, the 6th of January low, from where I could draw an uptrend line through the next higher lows, in this case the 14th of January low, and also the 20th of January low, and I had 3 touching points. That means it's a trend line, a proper one, because I had three touching points. And that then in the future acted as support here on these days, as you can see, and again here. Now, why did I draw it from this low here or that low here? Because the uptrend line would have been too flat, and it wouldn't have meant anything. So you need to try to find one which actually hugs the data to an extent, but which then works. And this one did. And as you can see here, we then held here at support twice on that trend line on these 2 days. But then on the 27th of February, we fell through that uptrend line and closed below it. So that was a trend line break for me. Break, and it was also a valid trend line break because we fell through this previous reaction low here and also there. But what happened since is that we bounced back. But where did we bounce back to? Can you see, lo and behold, our previous breached uptrend line now acted as resistance. Not just last Tuesday on the 4th of March, but also on Wednesday. So you can see here how that can be a very powerful tool to then enter in the direction of the counter trend move short term against the major trend, if you are so inclined. As I said to you before, it's always safer to trade with the overall trend than against it. But I know that some of you like to trade against the overbearing trend. So anyway, what is going on with regards to the gold price? As you can see, yes, we've had a corrective move here, But basically, as long as we stay above the 28th of February low here at around $2,832 per troy ounce on this daily financial bet here anyway, we're still in an uptrend. So yes, we are losing upside momentum and trading sideways, but we're still pointing higher. Now, can I look at ALB? Let's do that. ALB. And thanks for keeping these questions coming. I hope you mean Alba Mineral Resources. I don't know. Can you just tell me, Juggernaut? In the meantime, I'll answer the other question, AMAT. Is AMAT applied materials? Juggernaut, yes, okay. So let's go back to ALB. As you can tell, I'm not that familiar with all of these stocks because I'm very busy doing lots of other stuff. But anyway, what we can see here is that we, first of all, see a stock here which is not very traded. Can you see here all these gaps on this chart? So to get in and out of it, the spread is probably going to be quite wide and it's not going to be easy to manage your stop losses. So you have to be aware of that. But if you're in this position, well, what's the trend telling us? Well, the trend is telling us we're still in a downtrend. And you can see we have a series of higher, lower lows and higher, lower highs and lower lows, which is a definition of a downtrend. So let's look on the weekly chart and see how far we're going. And you can see we've fallen through the March 2020 low and we're trading all-time lows. So sorry to say, if you're long, there is no indication that that trend is changing direction at the moment. And if you're short, well, good on you. Keep your shorts, keep getting short, staying short. Now, if you want to look at applied materials, let's do that. Here we go, a more well-known stock. What we can see here is we had a nice uptrend, a very strong uptrend, but since then, like a lot of the other US tech stocks, we have come down quite significantly and we are currently still in a corrective phase because we are holding at this support area. Can you see here we're testing the previous highs going back to late August, etc. So that might act as support going forward. If we don't hold here today, then what we could see, that's the weekly chart, sorry. If I go back to the monthly chart. So we're trying to see, as you can see here, we're trying to hold at the support area held here for 3 days, and we're trying to break above this high here. If we do so, we may head back up again, and that might be an ABC correction. So that pattern I told you about on the 5-minute chart on the DAX and also on this Serabi Gold daily chart is valid here. So if we rise above this high here from the 4th of March, you could, on that pattern alone, but it only works half of the time, go long, put your stop below these lows, and then you should see upside, which is several times your risk going forward. But the trend is still pointing down. So you're trading against the short-term trend, just be aware of that. Now, if you're short, perhaps you would have to take out this highs here from late February before you could question that current downtrend from a technical perspective. Let's also look at, for somebody else, at Rolls-Royce. And I've got my cap stock on here. Rolls-Royce has been rising nearly as much as NVIDIA over the last couple of years, so a very, very strong stock, but it's keeling over in the short term. You can see here on the daily chart, we've had a huge move up after the earnings just a few weeks ago, and you can see we're just losing some upside momentum here near all-time record highs. So short-term retracement happening here. Longer term, still a very bullish chart. You can see here we've had 1, 2, 3, 4, 5, 6, 7, 8 months of continuous gains, and there is no reason to think that that's not going to continue, even if on the short term we can see a minor pullback, and that might actually be an opportunity to go long again in the stock, because basically this is a very, very strong uptrend with regards to Rolls-Royce. Let's look at another stock, another share here. if I can type, that would help. Albemarle Corp, I don't know how you pronounce it, but you can see here again, short term in a downtrend. We're trying to revert to the upside. So what I would probably do is draw in a trend line here. We can probably even put a channel on here because you can see that we can see on the channel. Let me just get this up. Why didn't this work? Okay, sorry, I'm having an issue here. Let me just do, let's just do the trend. Sorry, everyone. My mouse doesn't want me to do what I want to do. There we go. So we don't want any data to go through. That's our current downtrend. So here we're trading slightly lower. We're trading above support. We have some positive divergence. This is higher than that one here, marginally. So perhaps we could see a reversal to the upside. And the long-term trend, though, is still bearish. So yes, short-term you may hold here, but I would place my stop below that low from last week, because if that gets taken out, it's pretty likely we're going to slide further towards the lows seen here in March of 2020. And on the daily chart, short-term, for a reversal to happen, what you want to see is a break through that downtrend line, ideally, from a technical perspective. Now, I've got 29 seconds left. Lloyd, for the last person here to send me a question. Thanks for sending all of these in. So Lloyd's Banking Group, and basically what we can see here, again, an uptrend, very healthy stock, looking good. Short term, we're keeling over, we're losing some upside momentum. Now, here, the big support areas are the highs going back to July of last year and October of last year. Is it going to fall that far? Perhaps not, we'll have to see. This is a big bullish Marubozu pattern. Usually at its halfway point, it could act as support. It hasn't today. So short term, we may actually slip quite a bit further, I think, judging by that. So we could easily probably retest the 20th of February high, which was made around 67.58 on this daily financial bet. So short term, Lloyd share price topping out. Longer term, still bullish. Thank you very much for watching Technically Speaking. See you not next week, but in the first week of April when I'm back from my holiday. Thanks, goodbye.
What is going on, everybody, and welcome back to today's segment. We got one more day under our belt, another sell-off. Gus, something is different. Good to see you, my friend. I just don't know what it is. But how are we doing today? We survived.
Yeah, survived. Survived was the word I would use. It was another bloody day. Lots of sell-off. I'm very long delta, as I mentioned last Tuesday, and fortunately, all of my positions are long-term enough that I have no real concerns yet. But the portfolio is hurting. So yeah, hurting on that front. But yeah, good day overall. Bad hair day. I think that's what's different. I'm flat.
I'm actually rocking with it. I don't know. I'm flat. I don't know. I don't know what it is, but I'm rocking with it. I don't know. I can't put my finger on it. I'm definitely rocking.
Some asymmetry happening.
Some asymmetry. Yeah. No, I hear you. I mean, on my end, been pretty beat down in terms of the portfolio. Well, we'll look at that. I got a couple positions on that expired tomorrow at close. So we had some weeklies on, and then I have a longer dated position as well. When you said longer term, were you talking around that 45 days to expiration, or you have some past that too?
I have most are past that. In fact, I think my tightest position in terms of time right now is this NVIDIA vertical, which is 42 DTE. Outside of that, I'm pretty sure everything is north of 60.
I got you. That's not too bad.
Yeah,
you got some good time.
I got lots over 100 too. The longest of the bunch.
You got a lot of.
What's up?
Are those longer dated ones long delta?
Yes.
Oh, nice. Oh,
yeah.
You got it.
Yeah, just playing for the eventual recovery. I said on Tuesday when I entered all these positions, I'm not really trying to time this up too much. I do have time constraints, but I didn't was not confident that we were at the bottom even after little bit of recovery yesterday.
Yeah.
I will say I did kind of feel like a genius yesterday, but we pulled back again. But yeah, no big deal. Like I said, I'm hurting, but as I say often, it's not a loss until you sell. I'm down, but
Not
I'm
until
not
you sell.
lost.
Technically buy back.
That's where we're
Technically buying it back. Yeah.
Data trader
But
Bob Sala,
no.
what's going on over in the chat? Bob, haven't seen you in a while. Good to see you, brother.
guys. How we doing? No, yeah, we put on some positions on QQQ. Been looking at, I have something on Meta too, so we'll take a look at those. But you kind of mentioned it, timing this bounce. We all kind of know and suspect, like if we got a bounce today or yesterday or tomorrow, next week, it's not going to really be a surprise per se to anybody, just based off of how much we fell and how quick we fell. But yeah, timing, it's going to be that difficult part because a couple of the positions that I do have on right now are long delta, but they expire tomorrow after the bell. So we need the market to move. And this is what we got on right here, Gus. We got Meta. We have 3 QQQ positions on, and really we're pretty much at the bottom on this one. So any type of bounce would be really nice. We got a ways to go on some of these. So if tomorrow's the day, it would be nice, but we also have some 42 days till expiration on too. So there's one of those that, don't have to time as much, maybe just catch it within that window. But that's what we're looking at right now. And then Meta, I mean, this one was up pretty decent yesterday.
Don't like is the uncertainty, the policy fog. They cannot lay out investments, plans, business ideas in any kind of